Sorry? Okay, good morning, everyone, and welcome. It's a cool morning from all the heats we've all been struggling and complaining about in Lagos. So we're all welcome. We're welcome to the NESG ZQuest Financial Inclusion Conference. My name is Ola Oladele. I am the founder of the Money Week Club, and I will be your host for today. If you are outside and you can hear me, please come in. We are starting right now. And to open the event, we have none other than the Group Managing Director of ZQuest. As you know, this event is co-hosted by the NESG and ZQuest. So we'll have the Group Managing Director of ZQuest, Mr. Adedayo Said Amzad. He will come and give us our opening remarks. Thank you.
Morning, everyone. Thank you and welcome to this event hosted by the NESG and we at ZQuest. This event came out of the plannings for the NESG Summit last year, where the entire theme was around financial inclusion, the fierce urgency of now. And as we go into the election period, there's nothing more that shows a transition than an election in a country like ours. And we think it's not just about the political environment, it's also about the financial environment. And the exact same thing would apply here. What else do we need to do to transform our financial markets and financial services industry as we go into the future? What are the areas that we think there are gaps? What can we do to address those gaps together as a people, as a government, and as an industry? And we're here today gathered to have those conversations. We've identified 3 thematic points that we think are important. One is around regulation, how to balance regulation and innovation, which I think is becoming an important trend. Gathered in this room are people from the traditional financial industry players like the banks, asset managers and co. And we have people from the fintech space. And we think that as we go on, it will be important to discuss how we can find mutually beneficial ways for both sectors to work together. Another point is around what we need to do to bring more foreign investment into the country. We all know that our growth as a country will depend on how much investment we can mobilize, both locally and from the foreign space. And then we think that conversation is also very important. Another point is around the evolving consumer lending industry. We know that credit is the underlying thing for every economy to grow. We need to be a credit-driven economy. If I ask around here now, I'm not sure about how many people here came here with their cars bought on credit or left their home gotten a mortgage. And I do not think we can continue in that manner as a country. We need to see what else we need to do to deepen credit in the country. And I'm pretty honored to welcome Dr. Demola Shogunle of the Stanbic Group to give the opening keynote address to all of us. And I say a welcome note again to all the honored speakers that we brought together to speak on each and every one of those panels. Of special recognition is to Professor David West, who's been a very key supporter of the NESG and the ZQuest Group. Please, if you're here, Madam, thank you for always honoring our invitation. And so please, I invite all of you to bring your put your thinking caps on, bring out your notepads and your pens, and join us as we have these very important conversations. Thank you and welcome.
Thank you so much, Mr. Amzat. Like Mr. Amzat said, our keynote address will be taken or will be given by Mr. Demola Shogunle. He is the CEO of Stanbic IBTC Holdings. He's also a director at the NESG, and he'll be joining us via the web. So we should be looking at this screen to listen to his address.
Yes, fantastic. Thank you very much. I hope you can hear me loud and clear. Good morning, ladies and gentlemen. Do I take it for granted that you can hear me and you can see me?
We can hear you, sir. Go ahead.
Fantastic. Thank you very much. Very good introduction, and the topic and all these discussions that we've already set out for ourselves today. I would say could not have come at a better time. Just giving so many things happening at the same time, and even pre general election year, being 2022, what we are discussing now, very very important. My job is to just tease out some issues, bring up some things, like puzzles, let us see one or two things, hopefully that will elicit deeper discussion during the panel engagement, and hopefully we will be able to narrow down to the exact things that we should be doing, and we can go away with serious I would say takeaway. Please, I'm going to share my screen in case you can hear me, in case you can see me. Just confirm to me that you can see my screen. What I plan to do is to run through very quickly about 10 slides. I won't take too much of your time. And those 10 slides hopefully should be able, to tell us exactly, what we are meant to be looking at. Please, can you see my slide?
Can, sir.
Can you see the slide, please?
Yes, we can.
Fantastic. Okay, then we are good to go. So look, when you look at financial sector as a tool to drive prosperity, inclusion, for me, it is very, very key. There is one thing to have economic growth. People will tell you, oh, Nigeria, 2021, despite COVID, despite all the issues, we ended up with a GDP growth rate of about 3.4%. That is just a figure. How many people became richer? How many people became poorer? You understand what is the state of well-being? Very, very key. And that is where being able to have what you call prosperity inclusion, to drive it, becomes very, very important. The importance of the financial sector as a tool to drive prosperity inclusion cannot be overemphasized. We know the size of the financial system in Nigeria is meant to drive so many things. The effective integration of credit into the economy is essential in supporting poverty reduction initiatives in Nigeria's economic agenda. So if you want to, drive, and reduce, all the things that we are talking about when it comes to poverty reduction and poverty alleviation, the financial system will have to come to the table, and it has to come to the table, big time. And I will say that that is very important because, without it, we will struggle. The financial sector through commercial banks, and the capital market, including insurance, including investment companies. When you look at the financial sector, has always played a critical role in funding capital investment in critical sectors such as power, infrastructure, oil and gas, telecoms, manufacturing, and many more. The important thing is that when you look at the configuration and you look, at a granular detail, how the support that the financial system has been giving to the economy. Industry loans remain largely concentrated in the oil and gas sector, and that is the reality. The screen that what you have on the screen, you can see that as far back as 2015, you will see oil and gas, almost 17-18%, of the total credit, to the private sector. At a point, it got to almost 22-23%. So, even in 2021, based on the result that the banks, had released, out of a total, credit to this private sector of about, let's say 25 trillion naira, almost $50 billion equivalent. 17% is to oil and gas, and that's a massive concentration, right? So the banking system industry loans remain concentrated in the oil and gas sector, as the Nigerian capital market continues to evolve and play a larger role of providing longer term funding to, what you call it, large corporates and institutions. However, financial institutions such as commercial banks are likely to fund smaller businesses and SMEs. And that is key, because when you look at, where you want to drive, SMEs and the rest, it's not in the oil and gas. It has to be, those who are playing in the small businesses, those who are playing in the service industries and the rest of it. So the important thing also is to look at, the fact that when you look at Nigeria, you compare Nigeria to what you see, within the context of Africa, Nigeria ranks low, and it's a fact, and we need to just bear that in mind. We rank low when it comes to penetration. World Bank ranks Nigeria among the poorest nations globally, with an estimated 40% of Nigerians living below the poverty line. That is a massive number. I mean, at times you want to check, the demographics, you want to check the population of African countries, and imagine the number of people or the number of countries that you can pack into 40% of Nigeria's population. Is a lot. According to the Credit Bureau of Association of Nigeria, only 4% of the 40 million micro SMEs in the country have access to credit. And that is really, really tough. The total value of private sector consumer credit is only around 8% of total loans in Nigeria. And if you look at on the right side of the graph, just look at Nigeria and look at some other countries. So when we are talking about only 8%, right, of the total loan, right, being given, for consumer credit, if you look at South Africa, you are talking about 45%. So what we're saying is that what we have here is doable. And when you look at private sector credit to GDP, look at where Nigeria is, and look at other African countries. Some African countries are doing private sector credit that is in excess of their GDP, over 100%. Kenya is almost 40%. So please, what we are saying is that we've got a lot of work to do, and these are the facts that we cannot argue against. And it's important for us to know that, look, what we are saying today, what we are discussing, some other African countries are already gone ahead. It's doable, right? If we put our minds to all those things, and we can unbottle some of the challenges, factors hindering micro SMEs and consumer credit growth. Many factors, I can tell you, but what I've highlighted here, we are talking about, let's say 6. Number 1 is lack of credit history. You have another one, inability to keep proper financial records. Another one, non-realization of collaterals. These are key facts. And if you've had to learn and you wanted to foreclose, you will know how difficult it is, to realize the collateral. Lack of management, strategies. Stiff competition from larger corporates. I mean, you have large corporates that could go to the market, issue a commercial paper, issue a short-dated bond, maybe a 3-year bond, and they can raise massive amount of money, in excess of 100 billion. So that competition is there. Then you also have limited business presence of micro SMEs. Many years ago, I came across a study, and Stanbic IBTC, participated in that study decades ago, I think for the World Bank. And it was dimensioned to just find out, some of the key challenges, for SMEs and, in terms of credit and all those things. And, within that study, it was discovered that, look, what we call the cost of credit and access to credit, you add the two together, they will only represent about 15% of the problems militating against micro SMEs in the country. Only 15%. So, and you remember there was a time, in the banking industry where banks are meant to take equity position. They are meant to set that at about 5% of their profit after tax and use that 5% as equity in SMEs. What does that translate to? It means that, look, the cost of credit or cost of fund is zero, and the money is also available because it was compared by a regulatory pronouncement. Do you know that the problem was not solved? Because the banking industry then was only trying to solve 15%. The 85% of the challenges and the problem did not allow those entities that got those funding free. They got the money as equity, and they also got some expertise from banks. But most of them did not survive. More than 99% of them did not survive. A few, one or two or three, came through, but most of them did not survive. So what are we saying? We're saying that it goes beyond just access to credit and the cost of the credit. As you can see, when you are talking about limited business presence, when you are talking about stiff covenant, when you are talking about management strategies, when you are talking about non-realization of collateral, if you want to know if you want to know the other context, go and check, the ease of doing business in the country. From every available data, right, the ease of doing business will impact most micro SMEs. The corporates, they have the war chest, they have the corporate governance, they have the risk management, they have the resilience to weather the storm and actually create something for themselves to surmount those challenges. But when you're looking at ease of doing business in Nigeria, micro SMEs, they are the victims. Everything, whether multiple checkpoints, they are the victims. You cannot gain access to the port, they are the victims. You import your container, you cannot clear it within 3, 4, 5 days. SMEs are the victims because their margins are very thin. So those are some of the challenges, and it's good for us to bear that in mind, so that you don't say, look, is it because I'm coming from the banking industry, I'm coming from the financial sector, I'm talking like this? These are facts, and it's good for us to understand that. So let's move on very quickly. In terms of, driving, what we are talking about, to drive scale and inclusive development. One, we can drive high level of mobile adoption via partnership with fintechs, telcos, and tech giants. We spoke to some futurists about about 2 years ago, and they were telling us, that post-COVID world, 3 elements will determine, substantially, corporate entities that will play bigger roles within the global context. Number 1 is trust. Number 2 is collective intelligence. And number 3, right, is partnership and collaboration. So there is a need for, the key players within the financial system, the key players within the Nigerian economy to look deliberately at partnership. Can we partner with fintechs? Can we partner with telcos? Can we partner with tech giants? The answer is yes, and which is very, very important. You must all have come across the news, pertaining to a subsea cable, that is meant to land in Nigeria. Is meant to be 20 times, more powerful than the kind of, connectivity and all those things that we've got now. What will that do? If we partner, if there is a strong partnership between the financial industry, between the fintech, between the telcos, we can start to drive, a lot of, mobile adoption. We can start to drive a lot of scale. We can start to drive a lot of inclusive development. Second point, you also want to develop credit data infrastructure, which is very important. Again, bear with me, you will see partnership by partnering with credit registrars to access data, on micro SMEs. Very, very key. You want to create financial literacy programs to provide basic financial offerings to micro SMEs. That is also very key. And it's good for us, to be able to bear that in mind. You want to facilitate, open banking initiative, that will enable information sharing and also collaboration amongst key stakeholders, to develop innovative financial products. That is key. Of course, we should look out for, a very conducive regulatory environment, that will more or less incentivize, and also try as much as possible, to reduce, the cost to serve the segment. I will tell you that, look, I think I've been at a strategy retreat where we are discussing some of the KYC requirements. And we're saying that given the peculiarities that we've got in Nigeria, why are we still asking, if we are talking about financial inclusion, we should be able to use other data sets as, to tag and to identify those who are meant to come into the financial system instead of the traditional. One of the traditional items is somebody will say that you should bring, proof of address. Proof of address. And one of the key elements of that, they say you should bring utility bill. Utility bill. Is it water bill? We get the water bill. Fine. If you look at, some of our, let's say some hardworking Nigerians, let's say, fishermen, in some of the, coastal areas. What do you mean by proof of address? How do you get proof of address for somebody that is mobile? How do you get proof of address? The headers that we are talking about. What is the proof of address? If you want to extend financial inclusion to them, but they have their SIM card, hopefully registered. Can we use point of presence and you geolocate it on Google Map? That is far better. So if you want to, where does he sleep? Go and check, where the SIM card is located between 11 p.m. and 5 a.m. and backtest it for the past 1 year, backtest for the past 2 years. It will tell you where this, fisherman, where the guy, passes the night every day. Can we use that as, point of presence? Where does he spend his daytime? If you go there under the bridge where he spends his daytime, they will tell you who the guy is. But if we continue to, look, we have to leapfrog somewhere and somehow. We know how in developed countries, streets are well mapped out, houses are well numbered, you have odd and even on different sides of the road. We are not structured like that. I'm not running down anybody. Go to Ibadan, the inner core of Ibadan city, and see how you can locate number 8 or number 9. It doesn't exist. So we have to find, ingenious ways to solve some of these problems, but let's go on. So what are we talking about, when we are talking about how financial system can channel the excess liquidity into productive activities in the risk sector to drive prosperity, inclusion. Bear with me, a lot had happened in the last 3 or 4 years. Massive amount of intervention, from the central bank, even including what is called DCRR, is a differentiated cash reserving mechanism, where a bank can tap into that DCRR for the purpose of on lending, to customers, right, who are playing in this space. So CBN had reduced the overcrowding effect by instituting even measures such as, 60% minimum loan to deposit ratio for commercial banks. And banks are complying, to the best of their ability. And CBN also try as much as possible to exclude non-bank domestic entities from OMO market to drive risk sector lending. They did that as far back as 2019, because it means that, OMO instrument, which is meant to manage short-term liquidity within the banking system, was reserved only for banks. They've removed non-bank domestic entities. What does that mean? It means to make money available instead of just lending to central bank. Central bank is very rich. Why are you lending to central bank? So all these measures have been put in place. But the important thing is that we also have to look at, the need to fund critical infrastructural development. For instance, you remember, about 2-3 weeks ago, announcement was made. Central bank is setting up, Infraco. We are talking about, that company is meant to mobilize, almost 3-5, something trillion naira to be able to start to invest in infrastructure, right? Which is very important. Stanbic IBTC early last year, we set up our own infrastructure fund. We got approval from Securities and Exchange Commission because some of these things you cannot book them on the balance sheet of a bank. When you look at the impact of Basel II, the impact of Basel III, IFRS 9, it is difficult and it will not be profitable to book, a loan facility, with a tenor range of about 10 to 15 years, 15 to 20 years on the balance sheet of a bank. It will not be profitable because it is called ECL, expected credit loss. The provision that you have to take day one will be so high just because of the tenor. So what ingenious way did we go about it? Stanbic IBTC, we've got, an entity in our asset management, is a non-bank, that has, access to high net worth individuals and institutional investors. Went to SEC and we put a program, 100 billion program, on the shelf, and hopefully we'll be able to drive, that in terms of injecting it, for infrastructure development. You want to stimulate public-private partnership in key sectors of the economy. And it is very important. Even some of the things that, whether Ministry of Works, some of the roads, they call them federal roads. Some of them are very, very, you can say very viable commercially. And the idea is to see whether you can use them to stimulate public-private partnership. Look at what has happened with tax credit. That Dangote Cement, Dangote Group, had been able to tap into. And you've seen what has happened when you look at the expressway between the former toll gate and going down to Mile 2 in Lagos. Standard road, good quality, delivered on time, on scope, on budget. That is the kind of partnership you are looking at. I'm also aware that NLNG is also doing something, within, Bonny area pertaining to tapping into this, tax credit for road infrastructure projects. Import substitution and backward integration. CBN, has been saying this, and we have seen it. Most of the banks, they've tapped into this because, look, the important thing is that you cannot continue to import all your raw materials. You cannot continue to import all your finished goods. For you to have inclusive development, you have to do backward integration. Backward integration is being supported, and please, if we have any of the players in micro SMEs here, I encourage you, do everything possible to make sure that you can tap into this. Import substitution, backward integration, even tap into the RT200 initiative of the central bank. What is RT200? Is for us to unlock about $200 billion of non-oil exports over a period of 5 years. And the idea is that we've got the potential. So if you are trying to do that over a period of 4 years, over a period of 5 years, we are talking about average of $40 billion to be derived, to be earned as non-oil exports every year. So I encourage every listener, check and tap into it, because there are 5 key areas or 5 key anchors for that. There is value adding export facility. If you approach your bank will approach central bank, and you can tap into that. You also have non-oil commodities expansion facility. You have an existing facility, you can expand. And you can't get it better. Why am I saying that? Check inflation rate. Inflation rate is trending around 15%. Core inflation is going up. Food inflation is going up. So whenever you have the two of them going up, inflation, even inflation expectation is high. Despite that, somebody is telling you that you can come and borrow at 5%. Can you see? So if you borrow now at 5% to expand, and it has to be for this purpose, you're already ahead. Because ordinarily, you should not be borrowing at 5% when inflation rate is doing double digit, is around 15. So you're already ahead by almost 10%. Right. And it's long term also, there's moratorium. So what am I saying? I'm trying to encourage all of us that some of these things, instead of complaining and lamenting, take action, tap into them, and see what can happen. A lot is also going on in terms of, the need to facilitate custom and port reforms and modernization. I've spoken about this, at a point in time. It's not impossible. Very soon, some ports will be designated for exports. Because it's unfortunate that, look, in the last, I don't know, maybe in the last 4 decades or 5 decades, everything pertaining to our port operations had been configured, body, soul, and spirit, sorry to say, have been configured to import. So if you want to export, it's like you are going against the wind. The headwinds are too many. The infrastructure is not configured to facilitate exports, except crude oil. And those ones are offshore. They have export terminals. But to export commodities, to export finished goods, everything, including checkpoint, everything is configured against those who are doing it. So these reforms are very important, and we need to bear that in mind. So I will just run very quickly, given time. Again, available homegrown solutions to bridge micro SMEs financing gap. And I've spoken a lot about some of this. Fintechs are leveraging on payment data to determine lending risk by utilizing smartphones data. Even in Stanbic IBTC, we've got our own EDO, we call it Enterprise Data Office. We can crunch some of this data, and we can crunch them to actually determine and to risk profile customers without credit history. A few players have leveraged alternative credit scoring algorithms to provide instant unsecured short-term loans to individuals. And once you start to give them credit, then they start building credit. I always think that the problem is to onboard people for the first time. You have no credit history. What can we use? Can we use your footprint on Instagram? Can we use your footprint on Facebook? Can we use your footprint on Twitter? Can we use the usage of data on your phone to dimension you, to profile you, and to know your ability to pay? That is very, very important. Banks have also set up SME hubs as an avenue to generate records on SMEs' transactional activities for credit scoring purposes. Banks are doing that. Even when it comes to manpower development, in Stanbic IBTC, we've got some initiatives where we even send some of our customers. We send them, to Lagos Business School. Right. There is a manpower development, space program in that, and it's intensive. And from there, they can also network. One of the customers, was just telling me how he was able to develop another fantastic network, of key players in other sectors. A quantity surveyor who is now doing so many things in different parts of the country because of the people he met at a program that we fully paid for, organized, and facilitated by Lagos Business School. A fantastic job along that area for Lagos Business School and Professor David West. Online payment provider, somebody like Paystack, has developed a solution for merchants to receive payments and other value-added services, such as invoicing, accounting integration, and transaction dashboard for SMEs. So, and more are still coming, based on where we sit. I don't want to mention names, but when it comes to trying to provide, integrated, solutions to merchants, more, initiatives are coming that will drive, micro SMEs, in terms of bridging the gap. Telcos, Nigeria, we were, I think 4 or 5 years ago, we were wondering, and the debate was so intense. When it comes to financial inclusion, should it be bank-led? Should it be telco-led? Right. At the end of the day, the banking industry set up SANEF, right, to drive that financial inclusion, agent banking, and all those things. Of course, the regulators also look at it and say, look, in terms of the telco-led, there was a workaround solution to say, look, let telcos go for PSB licenses. And PSB, licenses have been issued. The last two issued to the top two telcos. And it's a matter of time. They are going to provide opportunity to generate records on transactional activities and improve credit scoring, particularly in the rural areas where banking presence is limited. Right. And closing the gap in financial services in Nigeria is very key. A review of the latest financial inclusion survey report, published by EFINA, shows that a significant gap in financial services still exists. However, we need to bear in mind good improvements have been recorded in some areas, including payments. Right. And, you want to be proud of the improvement. However, we also need to check, how far we've gone. Just look at the table. Every year, the total number of the, what you can call the the adult population or the bankable population is increasing. As of 2020, we are talking about 106 million. And what percentage of them have been banked? As of 2020, 45%. So we are talking about financial inclusion in terms of those that have been banked. Right. Then look at remittances, 25% in terms of penetration. Savings account, 27%. Payments, we've made some improvement in payment. 2016, we were 12%. Payment had gone to 29%. Right. So in payment, we made improvement. But can we do much more? The answer is yes. Receive income, loans, I would say loans with a bank, the figures as of 2020, just 2%. Banking agents, improvement. In 2016, we are talking about 3%, we are now talking about 19%. So the important thing is that we are making progress, but we need to gain traction, faster. We need to gain traction, more quickly. A 2020 FinTech report by McKinsey & Co. also suggests that despite the success of financial technology within Nigeria, about 60 million eligible Nigerians are still without bank accounts. And in addition to this, the vast majority of those who have bank accounts remain underserved. Even in Stanbic IBTC, the way we look at it, we look at financial inclusion beyond just pay and receive. I.e., you have a bank account, you can pay money to your bank, and you can receive money, and you can take loans. We've extended that definition to look at microcredit, to look at micro insurance. Right. What about micro investment, mutual funds? What about you playing in the capital market? What about micro pension? These are part and parcel of financial inclusion. Of course, you can start from somewhere, but you have to take it to the point where you are not only enjoying banking services, you are not only enjoying payment, you are enjoying, investment, services and solutions. You are enjoying insurance. It's been democratized to the point where, they remove all the barriers, for you to come in and to go out. You can do stockbroking, you can do investment, you can do pension at the micro nano level. And that is where we are meant to migrate to very, very quickly. It is when we do that we see prosperity being extended, because we are bringing more people into the net, which is very important. You will see the next slide. And what is this one talking about? We need courage And again, I've mentioned it. There are some specifications that we will get, from global bodies and all those things. We have to find a way to domesticate some of them. Some of those items can only delay our progress. You understand? I mean, could we imagine now that we still want to use landlines, as a way to say we want to send, we want to get Nigerians to have telephones? There's no reason. We've been able to leapfrog. So the idea is to use some of the things we've got and the peculiarities to see to what extent we can solve some of our own problems. Most fintechs have targeted early adopters, individuals who are already making use of banking and other financial services and are willing to try new ones. And it's very important. Some of us are very impressed with some of the things that the fintechs are doing. Many fintechs have not had the capacity or appetite to introduce new customers to the banking system. But the important thing is that, there is opportunity for those who can find ways to deliver new and better services to the underserved and unbanked, because that is where you've got a lot of headroom. That headroom is there, willing and ready. Opportunity exists, for fintechs across the consumer spectrum, notably within the SME, space. You're talking about the affluent segment and increasingly in the mass market segment. And when you look at the boxes, or the chart on the right, you will see that given the significant role of SMEs in the economy, facilitating digital payments for this category of businesses will help boost their businesses and the economy. The economy can only benefit significantly when we bring, SMEs, we digitize their engagement with their customers, within their ecosystem, and we bring them into the financial system, and we make them to be financially inclusive. The economy will benefit. Nigerians will benefit significantly from it, and hopefully, we can all enjoy the benefits. So look at the chart there. You see, accounts, savings and investment. Some of them, you see where key players, consumers are playing, customer segment. You see lending, SMEs, very, very small. Payment, you see SMEs, a number of fintechs who are playing in that space. Insurance, look at what is happening in that space. So a lot of headroom for growth. That's the summary of this slide. So this is my last slide. Survival strategies for micro SMEs. I will encourage, constantly reevaluate your business model. COVID-19 has changed the way organizations will conduct their businesses into the future. Therefore, it is pertinent, it is important, for micro SMEs, for organizations to reevaluate their business strategies, and make them to be fit for purpose, future ready, future resilient. Is very, very important. Second point, you've got to leverage on technology. And the way I look at it is this, you can say, oh, but I'm not, no. If you are an entrepreneur, if you are the owner of a business, the moment you have your cell phone, whether it is a feature phone or a smartphone, you are already, adopting technology. Only that you have not expanded your mind to be able to know that you are already, a user of technology. So leverage technology greatly. Technology is shaping the face of businesses. SMEs and large corporates need to build their brands online, and everybody will benefit from it. Then last point, you need to find a way to strengthen your capital base. Businesses, need to boost their capital base to provide buffers against uncertain events. There are many ways to boost your capital base. You can use most of the things, just make sure that they have value, and the value, both tangible and intangible, right? And you use that, it builds resilience. You calm down and you can play, even with small margin, because you've got enough capital base. I would like to drop the anchor here and thank you most sincerely, and big thank you to NASG for giving me this opportunity, to engage, with the listeners and the audience. Thank you very much.
Thank you so much, sir. Dr. Shogunle's session was quite insightful. He started with statistics. He has shown us the reality of the work ahead of us as Nigerians. And if you have been in Nigeria in the past 2 years, you understand that economic realities tie into security, tie into your own personal stability, even if you are fine. So it's not just about helping people and making it feel like it's charity work when you are okay. It's about securing your environment. It's about being able to walk around freely. It's about being able to eat comfortably and not feel like you need to apologize. You know, so it's a challenge that we all have to address. And it's good that the intelligent, smart, all suited up looking people are the ones having these discussions, because we believe that this is where the solutions come from. So we'll be going into our first plenary session with the foundation that has been laid. And this session is basically on financial sector and economic expansion, mobilizing domestic resources for our inclusive prosperity. Yes, it sounds like big English, but let me repeat it again. It's on financial sector and economic expansion, which is something that we all know that we need as a nation. I mean, I think that we can all recognize the fact that our economy has shrunk, even though we are saying GDP is in positive range, but we know that things have just slowed down, and that is really the economy shrinking. So we need to start talking about, not just talking, but making moves towards expanding our economy. So I will be introducing the panelists, and I would appreciate that as I call your name up, you come up as I read your profile. So our first panelist for this plenary session is Dayo Obisan. He is the Executive Commissioner, Operations at the Securities and Exchange Commission. Please clap for him. Make him feel warm and welcome. Where he oversees the directorate responsible for the core operations. Yes, anywhere. Where he oversees the directorate responsible for the core operations of the commission. Prior to his appointment, he worked in the investment management industry for over 18 years with Afrinvest Asset Management, Chapel Hill, Denham, and later as the managing director, Greenwich Asset Management. He was the president of Fund Managers Association of Nigeria, FMAN, between 2018 and 2020. Please give me a round of applause and welcome. Our next panelist is Mr. Osei Anao. He's a chartered accountant and a chartered financial analyst. Mr. Osei's work experience spans banking and professional accounting practice. Most recently, he was the financial controller of All On, Pact Investment Company established by Shell Petroleum Development Company Limited. Mr. Osei is currently the head financial, regulatory, and subsidiary reporting, Standard Chartered Bank, and Chief Financial Officer, Standard Chartered Capital and Advisory. You're welcome. Our next panelist is Mr. Uwana Esang. He is a respected, he's a respected corporate strategy, business optimization, and enterprise transformation executive with 20 years experience in the financial services industry. He has successfully executed multidimensional corporate transformation and business optimization programs across 2 banks, the first within Nigeria and the second across a $25 billion Pan-African banking group spanning 35 countries and 4 languages, impacting 7,000 to 20,000 employees at a time. He is currently the Managing Director, Chief Executive Officer of Primera Microfinance Bank, a leading and technology-driven microfinance bank in Nigeria. The next panelist is Mr. Ayo Bankole Akintujoye. He is the convener, Lagos SME Bootcamp. Please, a round of applause, please. He is a strategy and transformation professional with a decade experience that covers leadership roles as a head of strategy group in financial markets, insurance, and oil and gas industry. As a strategy consultant, he led many strategy projects across sub-Saharan Africa, working with KPMG, PwC, Philips Consulting, and C2G Consulting. He has provided strategy advice to over 120 companies, government, and development institutions, including the AFDB, World Bank, ExxonMobil, Chevron, Bristol Group, and SME organizations with transactions values of over $120 million. His
consulting experience cuts across strategy and execution, change management, process improvement, due diligence, and mergers and acquisition. Finally, our last panelist is Mr. Zeal Akariwe. He is the Chief Executive Officer, Graham Black Group. I hope I pronounced that right. He is an experienced treasury and financial advisory executive with a demonstrated history of working in the banking industry. He is skilled in derivatives, market risk, treasury, structured finance, financial structuring, and financial risks. Now, to moderate this panel, we have Rena Oseimi. She is the Chief Operating Officer at Zimvest, and she'll be moderating the session. Now, a gentle reminder to put your phones on silent. There will be opportunities to ask questions at the end. And for those on Zoom, we also recognize that Zoom lives matter. So we will, please make use of the Q&A button on Zoom, and we'll be sure to take your questions. Thank you.
Good morning, distinguished ladies and gentlemen. My name is Rena. Again, thanks Ola for the warm introductions. And welcome, gentlemen. Thank you for joining us. We'll be going straight into the panel session because we have about 50 minutes. And Dr. Oshogunle has set the background for these discussions. So I'll just go straight into the questions. We are discussing mobilizing domestic resources for financial inclusive prosperity. So I'm a bit nervous. This is my first, moderating session. So just please be kind, a bit to me. Yes, please, water. And I'll just thank you very much. Don't worry, I'll get into it soon. Right. So I'll go straight into the topic. Very important topic that Dr. Oshogunle has set the background for. And interesting that you're sitting right next to me, Mr. Zeal, because my first question is actually to you. I understand that you're very passionate about economic policies, about enriching the lives of Nigerians. You've put out a lot of content, on these topics. So let's even start with what is inclusive prosperity, right? And what are the factors that support or contribute to it? We'll start from there.
Thank you very much. Yes, I've been very involved in my banking days. I was very involved with financial policy, helping formulate it and review it. I became particularly more interested when we got a new CBN governor, and I'll just leave it at that. But yeah, inclusive prosperity, I think I can, forgive me if I take it for granted that we all know what prosperity is. What inclusive prosperity is when as many people as possible have the opportunity, resource, and education to be able to take advantage of the economic growth, technological advancements, and the globalization that we are experiencing, so that they too can prosper irrespective of their background, their class, and their financial status. So that it's not complicated. It's just how many more people can you bring into the prosperity net. Now, some of the key factors that affect inclusive prosperity, Ayo here will talk about a lot regarding Ayo, Oana. I'm sure everyone else talk a lot about the conducive environment, financing, and all of that. But I'll talk about the softer issues around one of the key enablers for inclusive prosperity is education, because it's very difficult. I don't know if it's even possible. It's very, and by education, I need to clarify. I don't mean going to school, because I know there's a lot of confusion on the difference between education and schooling. I'm not referring to going to school. I'm referring to being educated. They're quite different. So when education is skewed or suboptimal, and you have majority of the people ill-educated, having inclusive prosperity is very difficult. Second factor that is also downplayed is the rule of law. If your economy and your society does not respect rule of law, then what you're going to have is that the very powerful people, the already prosperous people, will be able to skew the opportunities in only their favor. And so you find that those at the top echelon of society just keep growing, while those at the bottom keep falling off. And then the third is security. Well, obviously, we know that it's not easy to do any business if security is a major issue. So those three things are key factors. Now, the other thing that that's also I would like to emphasize is regarding the policies around solving the problem of inclusive prosperity. First of all, there will be who do you want to target in terms of getting them included in the net, and when do you want to create the policies for that targeting? So there are three groups of people you can target: the very low income, the middle class, and the upper class. Obviously, most people want to concentrate on the lower class. Some people think you can go after the upper class, but it all depends on this, what is going on in your economy specifically. The other issue is, when do you want to target them? There's the pre-distribution policy, and then there's the redistribution policy. The redistribution policies around inclusive prosperity come up after wealth is created. So that has to do with the social safety net, taxes, cash incentives for the poor, and things like that. That's after the money has been made. How do we redistribute it to those that are outside? But the money has already been made. And generally speaking, the money has been made by the rich. Then there's the pre-distribution, which is, in my opinion, the more important one for our economy. How do you get, before the money is made, how do you equalize the opportunities so that those at the bottom have as good opportunities as everybody else to be prosperous? How do you make policies so that the SMEs, the startups, the young people, the market man, the market woman, the headsmen, the people that are outside the prosperity net, how do you create pre-distribution policies so that they too can begin to prosper and contribute into the productivity net?
Thank you. That's, you couldn't have put it better. I just wanted to pick up on education, right? So when you say education is not just going to school, just can you briefly tell us what other means, that's available outside of self-education, obviously? Or, is that your point then? Okay,
so education is broken into two largely, formal and informal. School is the formal education, which is what the emphasis is on. The evidence of going to school is a certificate. And we know if you've tried employing in the last 10 years, that certificate, you put it aside first and then have a discussion. The evidence of being educated is character. Right. So you meet people that are educated. So sometimes you meet people at interviews and all that, and you ask them, what school did you attend? And he tells you, I didn't go to school, and you're surprised. The evidence of education is seen in society, because I personally define education as the ability to ask the right questions to get the relevant answers in order to solve personal and societal problems. So if you look at a society that has a lot of problems that cannot be solved, then that society is not educated. We've all gone to school. My friend here will drive his G-Wagon and drive, and they will be in traffic caused by a pothole. And we will all be in G-Wagons and Land Cruisers and Prados and Bentleys, 2 hours of traffic caused by a pothole, and nobody understands how to fix it. Then that entire society is not educated. So once you can get a society to be educated, then they will start to see the opportunities and take advantage of that and turn those opportunities into wealth creation. And then you can talk about inclusive prosperity.
Thank you. Thank you so much. Anyone else wants to lend their voice to this question, or should we go into the next one about inclusive prosperity?
Thank you very much. I think I'll just throw in a word or two around the education bit. The CEO of Stanbic mentioned some things around, well, I'll just use an analogy, opening your eyes where you can't see. Yeah. A couple of times, things are happening informally around us, and it's just like a vacuum. it can never stay there for long. Something will fill it. If you don't fill people's minds with the right information, and just to stem off from what Zil said, asking the right questions, getting relevant answers, and solving. So it's just like resolving a problem. The first step towards resolving a problem is problem identification. You need to identify there is a problem. So for example, people go into Ponzi schemes. It's because there is a nexus. They have an income or money, but there is a wide gap between them using that money to actualize a dream. So there is a delta, there is a space. That's why people spend a lot of time chasing religion, ideologies, chasing Ponzi's, because they don't see how 100,000 will make them live in Banana Island.
Right.
But if you let them know that you could build the blocks this way, then probably they will follow. It's still a probability, yes, but then at least you'll have sown that seed.
Thank you so much. So there's a lot of information. There's a lot we have to, do in terms of information dissemination and educating the investing public in that sense. So now let's go into our part as players. Just following from what you said, Mr. Now, what key strategies can the financial sector employ in driving prosperity inclusion in Nigeria?
Thank you very much. Okay, so what is financial inclusion? That is the first thing. So by my memory, financial inclusion means everyone having access to basic banking products, savings, some level of credit, and insurance. Now, when we define that, why is financial inclusion important? Why is it beneficial? Why are we pursuing it, basically?
Right.
It then leads me to the next point, which is it's meant to make everybody better off, more money for everybody. So for example, Usman, the guy that does my tire, in Lekki, tire is 29 tire, fortunately. So he's not, if he's banked, what happens is all of us are doing traffic around in the morning, pay him 200 naira. And he's the first son. And so for federal character, let's say his mother is in Edo State, and she's my village, Okpuchi. He has two other brothers. Now, because he's banked and he has to transfer money home, right? He will transfer money home and then she's forced to be banked. All right. And once she's banked, his two younger brothers have education possibility. And say, for example, their side gig is farming because they're in the village. And Usman, his mother, they all bring in savings, right? They're not able to use it all, but there's just money in the account. So you find out there's an excess in one angle, and right, there's utilization in another angle. Now, there are some people that need this money. So they will then take, the banks will then give that money as loans, right? And say, for example, it's even Usman's mother, she wants to buy a new grinding machine. And in a perfect world, what will happen is we'll have banking services that would meet her on the one hand that she's saving. We're able to use the history, give her credit, and even give her credit to buy a new grinding machine. And when that happens, we'll even call the insurance guy and say, please call my insurance. Perfect, everything is seamless, right? Now, she has the ability to expand capacity. Her children are going to school. Even me, as a banker, what then happens is my bonus is fat because Usman, his three brothers, his mother, they've all opened accounts. Student accounts, they're transferring money, transacting money. So Usman is richer, his mother is better off. I am better off, in addition to my tire being fixed. Now, government has more money, taxable base, tax it, and in best case scenario, even my village, they even now do the road because they have more money to do the road. So everyone else, everybody in that equation is better off, right? So that is the benefit of financial inclusion. Now, next part is there a gap? Well, everything about that slide says there's a huge gap. Now, the next question I then ask is, where is that gap situated? Right. Because from the example I give, which is Lekki, is Lekki is not Nigeria, right? Because the life we live is everybody has the POS, USD, SSD. Well, that's a bubble that we live in. So the question is, where's the gap? The gap is certainly not in Lekki, right? It may be in some areas of Lagos where, and it may be our favorite place, very rural areas where the completely unbanked is about 38%. So the question is, when we determine the components of that gap, how do we attract it? How do we attack it? That's the word. Now, unfortunately, the strategy for attacking savings, credit, and insurance may not be the same, right? But who is going to attack it, right? Next question is, who are the key players? Now, the financial sector is a very big sector, right? So you could have up to commercial banks. Even commercial banks, you have DFIs, you have microfinance banks. You also have investment banks. And then you have rating agencies, you have even regulators. We're all part of it. Yeah. Now, but for ease, I will categorize it into a few parts, right, that we just need for this conversation. Banks, microfinance banks, everybody falls in there. Technology, you need payment platforms, switching companies, and all those things. We just call them fintechs, and we're fine. Then, because of the argument of insurance, we have to just put insurance companies there, and we have to put government. So, say CBN. Well, now, how do we, as key players, right, address this gap? Now, it's scary because in a world where I look at the banks, they're even leaving rural areas. In fact, they're reducing branches, right? But that's not all bad because there's something called agency banking, right? The idea of agency banking is, right, we will take it to the rural areas, right? And which is very good. It's not a bad strategy. It's not, I know that the numbers are not speaking volumes now, but it's a good strategy, right? Bank focus on your core activities. And, you know, you'll be funny. The services that super agents provide, it's amazing. They provide USSD, savings, even credit. Even last time I checked, they're about to start selling solar items. So they focus on selling, that's fine. Now, problem is, if banks have the right products for people in the rural areas, why are they not taking advantage? Literacy.
Yeah, same gap.
Yes. There you go. Right. So then obviously there's insecurity, but in terms of strategy, I would say we could keep channeling the strategy element, the agency banking element. It's a good way. We also, as banks, you know, we also need to participate in this thing called financial literacy. You know why religious bunch in Nigeria? His point was not my point. It's not mine. So we should do more partnerships with imams, pastors, because that's where they will go and meet each other. You know, it's easier when that's their comfort zone. So they're already not guarded at that point in time. Say, okay, this is the benefit of financial literacy. This is the benefit of having a smartphone. You know, those conversations are easier at that point. So that will be a good strategy. Then also, another good thing about agency banking, it can sell all products at the same time, loans, savings, and all those things. Then it takes you to my last point. Sometimes I wonder, Nigeria, if you look at Nigeria as a product, right? So in the product life cycle, you have introduction, I think growth, maturity, and decline, right? Where maybe introduction and growth somehow. So when you don't have all these mature banks looking at only Dangote, you know, and you know that 80% of the population, that's what the slide said, not me, is broke. So what kind of bankers should we have? What should be our go-to-market strategy? I'm thinking we should have an investment banking go-to-market strategy, which is you go to the street, that will market woman, you teach her how to use bank account, you give her small credit, she expands, you keep growing her. And if you grow her through the sector, you find at some point, I will even go and meet the investment banker and say, guy, this is where my banking limit is. I mean, this is where you nurture her to do IPO, whatever, and the whole sector gains. Because what we then have in banking industry sometimes, largely, you know, we're corporate focused, and corporate focus means we're even mature companies. Yes. Nobody wants to touch these small companies. And, you know, and you really can't blame the small companies because small companies is one guy that has a very good idea, but doesn't know PowerPoint. He doesn't have an MBA. You know, so by the time he's bringing his presentation to you, When your bias is even Dangote. So if we have an incubator mentality and mindset, right, we'll say, okay, this is a good idea. What does this guy need? Better presentation. No, you may not teach him, but maybe you have a team on ground that would be package it. His financial model may be basic, right? Okay, you put a couple of things, and you know, it's. I mean, the credit is good,
right.
From that point of view. So those are the strategies for. Then one thing is, you know, we're going to struggle with credit for a very long time, right? Look, at the end of the day, organizations are. What's the primary value? Maximize shareholder wealth first. Now, any organization that cannot maximize shareholder wealth, what? There's no point of business. Now, however, while maximizing shareholder wealth, right, I understand I'm part of a society. I do not exist alone. And therefore, I do try to bring everybody inclusion. But if I'm losing shareholder value, then it cannot work. Now, if I borrow money I cannot get back, that's a bad strategy. So this is where regulation comes. This is where we need government support. Now, I believe it's my understanding that collecting money back in Nigeria is very hard. Why? I want all of us to answer this question. Not really, because we have this mentality that banks don't give money. Yes, I agree. Banks don't give money, but the question is why? Think about from an investment perspective. I apologize for sounding capitalist, but think about it. Right? What can banks do? One, buy treasury bills. The next revenue line is fees and commission income, but that means I have to have a robust deposit base. Now, how much is treasury bills? Less than 10%. How much is government bond? 12%. Now, if I give a loan 25%, why don't I want that? Except I'm afraid I won't get paid back. Yeah. Now, I think that if we are serious as a country, we should ask ourselves this question and find ways to make it easier for banks to get their money back, and credit will flow.
Right. So a common trend I'm seeing is, you know, still speaking to Mr. Obisa and Mr. Zeal's points around education.
Yes.
With, you know, and character as well.
No, character is everything, because ideally, like in Nigeria, you learn for character really, but in Nigeria we learn for collateral. It's the truth, because I don't trust you from day one. In fact, I've put 100% risk on your character first. So we know that if it gets there, at least I can retrieve my collateral. And you ask yourself, the MSC, what kind of collateral are they going to have? That is why they are being boycotted.
Right. I mean, you know, we can go on, and you know, education is such an important part, but I think we also need to rethink in having these conversations how we are, at the method, right?
I agree. So like you said, we need to come to the table with our own peculiarity. You know, this habit of reading textbooks. My challenge with reading textbooks is that's what one person understood. That's how you understood the word and you put it in the textbook. Let's come. I'm a Nigerian. This is what we can see. I don't have ID cards. I'm a fisherman. So will you say you not do business with me?
Okay, thank you so much, Mr. Nao. Thank you so much. I think, Mr. Did you want to lend your voice to this?
Yes, just very briefly. Yes, very quickly. So Say has raised some really good points, and he did ask the question, how do we get the money back, right? And that's a challenge. There's no doubt about it. In the sector where I play, we're very sensitive towards that. I'm in the microfinance sector, Primera Microfinance Bank. And I would say that, quite frankly, studies have shown that in the micro enterprise sector, and I'll speak to that when you get to ask the question directed to me, as long as there is a very strong interface, there's a very strong partnership, there's a heightened there's a heightened ability, and there's a heightened performance in terms of repayments. I've been in the commercial banking sector for about 18 years, and I'm now in the microfinance sector. I can tell you that the people who are more difficult to collect are actually the more resourced and more educated and powerful exposed people, because they have the means to evade collection. By the time I have a relationship with a lady in the market, and she has her integrity to protect within her peers, within her community, and I'm engaged with that community as a financier, it's a lot more difficult for them to evade, and the willingness to do so is less. So we'll just have to contextualize the approach and dimension it appropriately. But I mean, I fully get his point. I just thought I wanted to, let me just speak for the little man.
Yes,
thank you.
Of course. And over to Mr. Obisan. I think we would, take questions at the end. And at the end of the day, some of these things we're discussing, we are hoping to turn into action points to create policies and, move the needle forward. And Mr. Obisan, you've been an operator in the past, and then you're now a regulator, right? So you have in-depth and the bird's eye view of, the capital markets. How do you think the financial sector should mobilize and motivate domestic resources to drive scale and inclusive development?
Okay, so first of all, before you condemn me to be a regulator for my life, I've only been a regulator for 2 years, right, and I've been in the private sector. So before you banish me from that side to this side, but yes, a very clear caveat. But so we don't just paint a picture of doom and gloom. There are quite a couple of things that are quite necessary to bring to the fore. A lot of people have mentioned about stakeholders or professionals coming to the table with something. So let's talk about a couple of the opportunities available for this prosperity we're so much talking about. And it's not so far-fetched. Let's not paint a picture like the banks are just worried about getting their money back. All of us on this platform and everybody sat here, if you have some errant cousin that keeps coming back that never returns the money, you will not open the door when he knocks. So let's not make it like a problem for the banks. Banks have a business to run. And part of that business is using what they mobilize to generate more money. You didn't invest in the bank shares for it to be depleted because they loaned someone money and he didn't return. Sure. So they need to be looking out for that. But I'll just talk quickly because when we talk about MSMEs, inclusive prosperity, financial inclusion, a couple of things have been done. Maybe the dots haven't quite connected just yet. For example, crowdfunding in Nigeria was more of like almost an informal thing. You raise money from friends and family. Mm-hmm. You do your business. Yeah. Now, some people now stand in between as intermediaries. They now know many families and friends who raise money without knowing the end of a business. Imagine this, and I'm not describing a particular business model. I have a farm in Oyo, and I keep driving there in my Hilux. Well, this is not me personally, I'm just saying. So I keep driving there in my Hilux. Yes. But between Oyo and Ibadan or Gbogan, all the produce from my farm gets sold. And probably on one of those trips, I took my friend there. And he says that, okay, we could do this. Why don't I have one more Hilux? And we buy another parcel of land. A partnership has been formed. Mm-hmm. First, there's an opportunity. 2, there's partnership. 3, there's willingness. Lastly, is the capital to fund that willingness. Most of the stories or most of the reasons put forth is that there's no capital. But there are so many things. Part of it is this education that needs to go into it. Ask many people in private, well, Zil would know this. A lot of people that fund businesses, they tell you that for every 100 business, they expect only 5 to come back profitable. So let's be very clear. So there's crowdfunding. The MSMEs, there's so many intervention or target funds in different government establishments. There's the BOI, there's CBN. CBN has God knows how many funds. That's targeting creative industry, agriculture. Now, but the truth of the matter is those funds could as well be there, zipped up in bags, put in front of people's homes, But if there's that gap in information and knowledge, you will never know to reach out for it.
Right.
Even if you knew how to reach out for it, you only see the bag, you wouldn't know how to unzip it.
Yeah.
So, but instead of looking for more information, of what use is you going to the newspaper or page 6 of Punch newspaper to complain that the country is so hard? Spend more time, acquire more knowledge, know where things are happening. 2, even in the capital market. I mean, just on my way here, I was speaking to my colleagues, okay, how much did we do in terms of debt raising? That's almost 500 billion. In equity, almost 120 billion. Now, a lot of people, I've heard it many times before this event, that lenders are more comfortable with well-structured platforms. Of course, they should be.
Yes.
I mean, it's a rule of the pencil. You put your money where we see it will come back. Not you going somewhere you just know from day one, you're already making a provision of almost 90% because you're not sure the money will come back. But what could we do? What could the MSMEs do? First, start. Because right now, if all of us combined our experience and strength and we went to the market and we raised capital, we'll raise capital to put it in structured businesses. When I mean structured, it doesn't have to be established and ongoing. You just want to know that this person can even account for what I've given to him. Mm-hmm. So that's where financial record keeping comes in. 2, this person is on the right side of the law. The person needs to know how much he made for him to even know whether he's going to pay tax or not. And a private equity person will tell you one of the key variables, which is almost intangible, is the character of the person. Yeah, and that's what Zil spoke to about it. We come back all the way to character. Rena, if you're a billionaire, if you're a serial debtor, you won't pay.
Right.
Do you understand what I mean? So those are like things that are available. In the capital markets, there are even funds. Talk about infrastructure. For a long time, there's been this talk about the mismatch, that the banks cannot fund infrastructure, the money markets cannot fund infrastructure. We all know that. We've been saying that since pre-1960s. Let's do something about it. Now, they are now emerging long-term capital to the extent that even funds, collective investments, are now going into infrastructure. I mean, Demola mentioned it. They have an infrastructure fund. There are like 3 others. There's Chapel. I could mention quite a few. Just last week, we were considering many more applications towards infrastructure. Now we are emerging into green energy. So I just wanted to just dash that in. So it won't be just a tale of doom and gloom. Right. I think one clear thing in this country is stakeholder identification and stakeholder engagement. Everybody has a part to play. If you're a banker, you have your head of risk. I'm not too sure the head of sales is the best friends with the head of risk. But everybody has a can to carry. So let's identify the can. Just within the blink of an eye, I was on the other side. I know what I was saying about the regulators. Now I'm a regulator. I know what I see and I'm saying to the market operators. And everybody tells me, yeah, you drank the Kool-Aid. When did you go there? You started wearing kaftan and behaving like them. But the truth of the matter is everybody has a can to carry. For a regulator, you are meant to create a conducive environment fit for all. Fit for all it's not the most popular job, to be honest. Everybody wants to run like a hare. Just, okay, I sent you an application and I'm quick to market. But you're looking at other things. What are the unintended consequences? Just like your risk person will be asking you. And that's one of the things that you look out for. Then even if you're an innovator, because this will be a good opportunity to talk about the fintechs as well. Fintechs are doing very well. Professor Davidez is looking at me with corner eye, same as me, and I'm looking at her with corner eye. The truth of the matter is you have to look at everything in a whole circle. You want to create, but what are the likely or unlikely unintended consequences that needs to be mitigated? And that's why different people play different roles in ensuring that something is built. Not only is it built, it's successful, and lastly, it is sustainable. So I think to cap it all, there are quite a number of existing opportunities. But I think it's time for the conversation to be around who does what.
What, exactly.
If you are an MSME, one, what are your own obligations? Keep account. You are not keeping account only for the lender. You yourself need to know how much you make. Do an environmental or a business study research. Shouldn't you know where you are going to? Why should you start investing and buying a freezer to be making ice block in the middle of rainy season? So those are like clear things that we're talking.
Yeah.
You're thinking, wouldn't it make a lot of sense if you sit down, you do your own research, you follow the budget submission, you look through the budget submission, or you call your son just in case you can't read it, and it tells you, that due to insecurity issues, they are rebuilding some parts of the country. And you invest and you start sending cement there. So that's just little bits. Secondly, for the policies and the regulators, and now I'm speaking to myself, what is the aim? At the Securities and Exchange Commission, nobody claps based on the number of rules or operators we shut down. No, two things. You're meant to regulate and develop a market. What are the indices for developing the market? Check on the NGX, how much has it gone up? Check on FMDQ, how much has the index gone up? What have you done in the commodity space? Derivatives, how much has it grown? Non-interest capital markets, what have you done? How much sukuks did you facilitate? So that are things that are clearly measurable that you need to do. However, we can all be working in silos. This thing will not translate to growth or development if we don't connect the dots. So I'll leave it that one word: connect the dots and stakeholder engagement.
Thank you so much. I think, just recapping what you said, is everybody has a part to play, and we all need to take responsibility, to know more. So yes, the financial sector will put out information, would educate, will do our own part, but then also the investing public, individuals, MSMEs need to also, know about their own business, their own, productivity, and, just everyone take responsibility for their own parts. Thank you so much. I'll go straight to Mr. Esang. That's my next question is for you. How can the financial system channel persistent excess liquidity into productive activities in the real sector to drive prosperity inclusion?
Thank you very much. That question, if you really look deeply at that question, in my mind, the answer is in the question. The problem statement is in the question. So the question establishes that there's a financial system. Mm-hmm. We're all here. There's a system organized. It also says that there are channels, intermediaries, well-structured, well-regulated, they're present. It also says that there's a production or productive sector that's alive, that's kicking, that's very vibrant in Nigeria. But that productive sector is starved in spite of the fact that there's excess liquidity. So, you ask yourself, okay, this is a paradox. Yeah. How come there's an established financial system well-regulated? How come there is a hungry productive sector that's starved in the midst of excess liquidity? It means that there's a supply problem. Why is there a supply problem? So let's look at the sector, right? I'm in the microfinance space. Primary Microfinance Bank is regulated to intermediates within the small, micro, small, medium enterprise sector. There's now a new segment called Nano, which is quite interesting. If you look at 2021 report released by the Small Medium Enterprise Development Agency of Nigeria in conjunction with the National Bureau of Statistics, 46% of our GDP is generated by the MSME sector. If you look at that, how many businesses do we have? We have about 39 million businesses there. If you deep dive into those businesses, I'm going somewhere with this, you find that 98% of those businesses are, 97% of them are sole proprietorships. 98% have problems with access to finance. They've stated that access to finance is a problem, which goes to your question. But as a regulated entity, I cannot lend to you if you are not a registered entity, for example. I can't. Prudential guidelines, regulatory guidelines do not allow me to do that. But you find that of those 39 million businesses in the MSME sector, barely 4% are registered.
Side hustle.
Only 4% are registered. So no matter the goodwill or excess liquidity I'm sitting on, the entire financial system cannot deal with more than 4% today of the small, medium scale enterprises we have in Nigeria. So the question is, how do we catalyze registration? How do we migrate those businesses from being informal businesses into corporate citizens that are bankable, that are taxable? Yeah. And that's what my regulator says I should do. Common field to play. What that does is it opens up, it creates at least a 50% uptick just by the stroke of a pen in the available pool of businesses or people we can deal with. And secondly, if today the least you can spend to register a business with the CAC is 10,000 naira for a business name, how many people can afford that? It may sound like recharge card money to those of us in this room, but 10,000 naira is what some people work a whole month to earn. And yeah. And those are the people that we're targeting. So rather than subsidize certain things, which I would mention, can we subsidize company registration, for example? Or declare a holiday to say, you know what, for this limited time period of maybe 6 months, company registration for MSMEs is free. Go to the CAC and get free registration. That data is shared to the banks. We work with them and we start to migrate them into formal businesses and then go into partnerships. For example, at Primera, our business banking proposition involves helping MSMEs to understand business planning. What is the business plan? We're actually working with partners at Primera Microfinance Bank to provide that to MSMEs so that we start to build the cohort of bankable businesses. And by the time we improve that advocacy and education, we are deepening that pool, and then this excess liquidity can begin to flow into the system in a sustainable manner that allows us to get the money back and on-lend to others. So in terms of describing the landscape, describing the challenge and also proposing solutions, that's what I'll put forward.
Okay, I've spoken and I've been part of events just like this. I think one of the things that we must consciously, I'm not sure anyone, average age on this stage, I'm very sure it's less than 50. Maybe 45, or maybe 40. I'm just graying, so it's not like but I think we must start moving gradually from talk to do. Exactly. So I was just going to comment to the organizers, if you please kindly do us that one extra step of favor, if it's not already in the plan, to have maybe like a communique or a note from all this discussion, this plenary, the other ones, so that it can be publicly published somehow, so that the MSMEs listening to us online and the ones that are here know what they need to do. Nice. Because back to what he said, you can make it free. You can even dash people forms people who don't know about it won't still come. You understand?
Yes,
It is when you go to CAC office or their website, you know whether we are doing promo from 25 to 200. If you don't even know the WW, you won't even go there.
True.
But all of these things, so I'm suggesting strongly to the organizers, the MSMEs or the general public, let them know that, from our discussions, we identified X and Y. You as a startup or a new, there are many laws. I'm sure you're aware of the Nigeria Startup Bill. There's NIPC has a one-stop shop. The only thing, well, not the only thing, we are gradually moving to the stage where maybe CAC will be going to people's homes. That, how are you? You are just strolling around. Do you have a company? Let me register you. We are moving there, but, opportunities, because, the major painful thing is we are having these discussions now to people that have solutions. The people that require it may not be here, may not listen to it, and may not do anything about it if they do. And we'll keep coming back annually. So if you let them know, even on the government side, the policy that is required, like the thing is suggested from CAC, let CAC know. Anyone from CAC might not be on this platform, but if you write them that, okay, we met, ZCrest, NESG, part of the things we identified that, and send that, copy that to FIRS, that if CAC does this, more people will be in the tax net. And maybe copy the Honorable Minister. Unless they want more people come into the tax net, we can even start graduate. So if CAC is not doing, FIRS will be looking at, okay, if you do, I'll be getting more revenue. Have you done? And if you don't do, Honorable Minister can even say, okay, both of you, what's going on? In order to just diversify the economy further, let's look into this. So let's please do that.
Right. Thank you very much. It's part, and it speaks to my points earlier that let's not just have conversations, but let's take action plans and then move forward. Yes. Thank you so much. And thank you, Mr. Esang. And my last question will be to Mr. Ayobankole. You work with a lot of SMEs. You have a financial background. Again, what's homegrown solution? And I think we've spoken to some of these things. But what homegrown solution is available to bridge the financing gap for MSMEs, the agricultural businesses, and the rural economy in Nigeria?
You see, one of the good things about speaking last is that there's nothing left to say. You see, I started what we call the Lagos SME Bootcamp in 2018 to support micros and small businesses with all of these issues that we discussed. And since 2018, we have directly supported 4,500 SMEs. And one of the things that we have noticed is that every time, I've spoken at so many events and platforms to talk about MSMEs, and almost all the time, we are speaking above the heads of the people that we're talking about. Now, about 74% of MSMEs are in the nano space. Up until recently, the nano guys were not even captured under the MSME nomenclature. Up until just last year, right? Now, all the things that we have said is just going to be textbook solutions if we do not first even understand what constitutes the demography of these guys. And I'll go back to the example he started with. Usman, who is a organizer. There are so many organizers in Nigeria, right? And almost none of them scale. Organizers hardly ever scale. And that applies to literally every nano and micro business in this country. They never scale. Why? Because the system, by design, excludes them. First, banking sector. From the regulatory standpoint, what is even required by the banks to enable them support the nano and the micro businesses already excludes them by design. Now, first, why do people set up these businesses? They are not like you and I that have excess cash somewhere. Oh, how can I invest this money? Or, oh, I identify an opportunity somewhere, I need to take position. Majority of them, right, go in there for survival. So we need to understand the characteristics of our economy before we can solve the problem. It's root cause analysis, if you don't understand the root cause. So these guys are in there for survival. As a government or as stakeholders, if you know that your people are in there for survival, then your approach to solving their problems will begin to change. So if I'm in there for survival, naturally, the least of my problems will be to register, right? The least of my problems will be research. So, I can't remember who mentioned market research. Market research? Who's going to pay for market research? Out of what money am I going to do? I just want to survive. I just want to do something to eat, right? Now, an average micro business or MSME switch from one business model to another before they eventually die, right? Because, and why? Because they respond the fastest and the most severe to shocks. So once something happens, the business model fails because they don't have any shocker, right? Or shock absorber. So they move again to something else, try it again, they move again to something else. So what this means is that it's near impossible to intervene at individual level for these guys. And if you notice, they have found a way to mobilize these resources amongst themselves to support each other within their clusters. So the solution is right in our faces, which was why I was murmuring into him in his ears earlier that I don't like to sit where commercial bankers talk about MSMEs and say they don't like to pay. It's an outright misrepresentation of information. The guys who do not like to pay are the guys that the banks are giving the monies to. The big boys, the billionaires. How many banks have had problems because they did not give, because they gave MSMEs money? Literally none. A lot of the microfinance banks, the best of them, go and check their NPLs, is better than a lot of the big banks because they give to the guys on the street. They leverage on the clusters that these guys have provided amongst themselves to harness the opportunities in that space, and they do very well with it. So what we need to do now is to leverage on these clusters that already exist, right? Both at the micro level provided by themselves and the ones like us that we have already provided. Those who know these guys, work with them in clusters. Open, if you need to register them in clusters, provide credit to them in clusters, provide exposure to them. We are here celebrating technology because the technology ecosystem has almost become a cult. They rally around each other. They support each other from ideation stage to maturity. They support each other with ideation, not even just funding, ideation. You have an idea, they reiterate it for you. They support each other with pre-seed funding, with development of documents, with connection with funders, end to end. And to break in there today is very difficult. But again, how much can the tech guys do when over 70% of our people are even illiterate? They don't even know how to use. We're just scratching the surface. Technology is never going to solve financial inclusion problems. Let's stop deceiving ourselves. Because majority of those in the rural community are not even in this space. And most of them are micro and nano business owners. So what we need to do is to study critically the characteristics of these guys, leverage the clusters that exist, that they respect amongst themselves, and provide, now, mobilize resources from where there is excess, using those clusters as the gatesmen to reach the guys at the end of the funnel. If we do not reach those guys at the end of the funnel, we will never be able to unlock the potential that exists in those places. Nothing says Usman, who is a organizer in Lekki, cannot now have scaled over the past 5 years into a huge tire repair workshop where you drive your car in and they pull it out, and he has a lot of artisans working for him. Go to Suwa Market. Do you know Suwa? Yes, I do. There is a massive mechanic workshop in there where you move in your car, damaged, and it comes out near brand new. The only thing government ever does to those kind of places is demolish it and build big enterprises. It never solves any problem. What we need to do is go to that kind of environment, talk to their clusters, their unions, mobilize resources from the banks, right? With gatekeeper in between, maybe government or ministry of whoever, right? And provide them with credit for, provide maybe 10 baking facilities, 10 or 20, and say, okay, you are going to pay back on a daily basis or on a weekly basis using this type of model. And I can assure you, you are going to track the way you are going to grow wealth organically and incrementally over a period of years. Otherwise, we're going to stay here, we'll speak English on an annual basis, and we're not going to solve any problems. Thank you.
Well, that was really, really passionate, and thank you so much, Mr. Ayo Bankole. And this comes, I mean, this kind of wraps up our session, but I just want to go straight into questions from the online audience. And I'll still, back to you, Mr. Ayo Bankole, because it's related. How can we also ensure a focus on women-led MSMEs? Studies have shown that they have a direct effect on the prosperity of the family. So let's go into that.
How can we do what?
How can we also ensure a focus on women-led MSMEs?
God bless you. See, remember I told you that we need to understand why people go into businesses. Now, I can't remember that data off the top of my head, but we have it at the bootcamp. Most nano and micro businesses are owned by women. Again, because of survival. Is either they are single mothers or my mother started a micro business because my father dropped dead suddenly, and she just retired and invested her funds in my father's business, right? And there are so many women out there. You go to the streets, you see them. So if you are not focusing on women, right, you most likely are not focusing on anything if you are doing something for the nano and the micro businesses, right? So again, because they are there to survive, what you can do is to create women-led groups or clusters. Look at their churches. Look at their mosques. Look at their societies. Look at their social profiling. Nigerian women across tribes and cultures love social interactions. Look at those social groups that they belong to, right? Leverage the bond that they have with those social groups to intervene. During COVID-19, right, we had our community members who wanted to access CBN funding, and they told them to go and bring business plan. How can you tell a micro business that wants to die from COVID to bring a business plan? That's what I do for a living. I do business plans. I cannot tell a micro business to come and do a business plan, right? It means that we do not know how to solve these people's problems. So these women that group them into various clusters, give them one form. CAC form, for example, we should not even be doing forms. Give them a very simple slip. Why are you in business? Then group them. The ones who are going in business because they are widows, the ones who are because they are retired, the ones who are because their kids are in school. Group them into interests, right? And tie the interest, the motivation for them being in business with funders. There is excess funding waiting all over the world, targeted at these people, at these women. The problem is that there are no gatekeepers, there are no middle line people who can help them mobilize it. So that is what we need to do here. And I'm calling on all the stakeholders in this group, Primera, ZQuest, partner with the clusters that are doing this thing so that we can help these people beyond the academic and intellectual exercises that we do on an ongoing basis, right? Thank you.
Thank you. Thank you very much. You have a question, right?
And I really appreciate and love your passion. I mean, it's just a good, yeah. I mean, you're a good advocate. Yes, a senior one, if I may add, for them. But I just, for my own education and knowledge. So, even every other person in the nano space, I want to. Is it right for me to assume they have a plan? Even if they are going there because of survival, because of their widowed. Because, for example, someone comes and says, well, because I'm widowed, I want to start selling gravel in Daleko. That doesn't make sense to me. So that, you get what I mean? So it doesn't have to be in the context of formally putting things down. Research is research. Because we are calling it research. If anyone comes to meet me, I'm a Yoruba man, and says, oh, Mufema Taja, I want to start selling stuff. And he said, oh, Kilofeta, what do you want to sell? I said, I want to start selling pure water. What's the next question? Show my move. Will you thrive? That's part of research. You must have known. Then number two, you are talking of clusters. That is part of what I guess. I'm not a banker. Not yet. But I expect that is what the bankers want. Once there can be a path of how the money is going to come back. Why are we talking about? I know of 2 banks in this same country that started with this cluster funding. There was a name, they called it, but not even that value. That one is English. There was a name. There was Isusu Gulf Guaranteed. That was back then. It's just a mechanism of making sure you get money back. Whether you drop collateral or I hire, in my place where I'm from Badagry, there was a man called Avosenti. Avosenti was a professional credit, a recovery agent. He has 3 most prized assets: a stool, a mat, and a lantern. And he usually recovers money from people that owe rent. Once Avosenti comes, the whole neighbor knows you owe rent. He spreads his mat, puts his lantern, and sleep in front of your house. That's all he does. And as sure as anything, you will pay. So I just wanted to put it out there that as much as you are strongly pushing this narrative, being an advocate, please help bridge the gap. Because any other person, except you're just looking for angel funding or emotive funding, which of course it is positive, but anyone that's just going to do it as a business concern, they want to know that, will my money come back even if it's not for a profit? Or will it achieve the aim it's going to do? Thank you.
Thank you.
So very quickly, because of time,
Yes.
right? You are not wrong to ask if they have plans, but not in the context of the plan that we understand it. When you are in survivalist mode, planning for you becomes instinctive. You wake up in the morning, you see somebody is thirsty. That's a plan to give the person water to drink. Do you get what I mean? You don't know if there would be 30 other people that will buy the water. Your thinking level is not up to that point, right? And planning is from short term to long term. So the long, medium range level type of planning does not apply to them because they just want to survive. So I see that, 2, 3 people buy water in the morning. I immediately say I want to sell water, right? Now, so you are right. There should be some sort of planning, but not in the way that we require of them. Now, are the banks or the players right to require these things? Nobody said they are not. But what we are saying is that you have to solve problems that address. Look at what Grameen Bank, for example, did in Bangladesh. That is a problem that captures, that's a solution that captures the peculiar nature of the problem. If we do not understand why the demography of our people and why they are in business and the nature of their business and the fundamentals that drive those business, we will never solve the problem. And when we talk about us, I am not an advocate. I am. No. So advocacy is just a fraction of what I do. I live and breathe. I am a doer. I told you we've supported 4,500 MSMEs. I help them with developing business plans. I teach them stuff. I give them grants, self-funded, with just marginal support here and there, which is what we're saying, that it's not just me. There are so many others. We're saying institutions should come in and partner and collaborate, right? We can put down our pedigree or our collateral or put in the structure that would reduce the risk.
Right.
Are you following me?
Yes,
that's what we are saying.
Mr. Zeal has...
Let me connect the dots. He's talked about connecting the dots because both of you are, in my opinion, saying exactly the same things, just from perspectives. So, Osei said something. Any SME, I can tell you for free, I worked in Osei's bank for 10 years, that walks into Osei's bank for anything will be frustrated. I can tell you for free. It's not designed to solve. So, and we forget that commercial banks are not designed to solve microfinance problems. You walk into a commercial bank as an SME, I guarantee you frustration. It's guaranteed. I was in commercial banking for 15 years before I left. You can't. I mean, there was a report that came out. 70% of the exposures in Nigeria are by 500 BVNs. 500 BVNs. Or 70% of all the exposure in Nigeria are in 500 BVNs. The commercial banks are designed to deal with certain category of people called wholesale bankers. An SME has no business going there. And that's when I started off and I said education. I know a lot of people still think of schooling. I've done stuff with IO a few times. If somebody wants to do stuff in the micro world, I will not Zenith, GT, EcoBank, Stanchart. You're wasting your joyful time. Go to in fact, there's even a level, go to a microfinance bank. And I think there's community bank. And they go to your community bank. Now, the issue is all of the focus is at the commercial banking level, which is a problem in itself. And that problem needs to be solved. There's community banking. I will bet everything. Nobody here knows the name of a community bank. You're not part of us. You understand? How many microfinance? So we're trying to solve a problem of fishing, and then we're selling fishing rods to the man in the desert and wondering why it's not working. Direct the SMEs to where there's a design to solve their problem, and IO has articulated that. Now, talking about plans, every business, even if it's in survival mode, has a plan. Now, they may not be able to articulate the plan, but there's a plan. So, for example, there was a woman in 2019, we postponed elections by a week. There was a woman direct. She was, I don't know if she even died because they moved elections by a week. You do what she did. Elections were coming. On Wednesday, Thursday, election was on Saturday. What did she do? She went and borrowed money from her neighbors, her friends, her family, and bought a lot of corn and all that, and made kunu. Basins and basins of kunu, because she knows people are going to queue from morning to night to vote. They will want to drink stuff. Then she went and bought ice block. She rented a freezer. Did all that, waiting for Saturday. Then we postponed elections a week. That finished her. Did she have a plan? Of course she had a plan. If you had asked her, what's your business plan, what's your target market, all of that commercial banking lingo, you're wasting your time. Some people will go, rent a fridge, buy pure water, because they've heard that Dangote trucks, 40 Dangote trucks are bringing cement to this site. So they know construction is happening. Construction workers do what? Day and night. They need water. They need to eat. Now, ask her, what's the market size? How much capital do you need? What's the return you're going to get? That's a waste. So there is a plan. Now, the gap is still what I said, education. And that's what Lagos Bootcamp does. They would take the idea from the SMEs and then articulate it into a plan. Now, the plan, the person that has the plan may look at it and not recognize that that's their plan, but there is always a plan. Most of us here will be in the commercial banking space. We do not, I'll speak for myself. 22 years in the financial sector. When he even invited me to speak, I first declined. I said, I don't have the training, the expertise to deal with SMEs. I recognize that. Most people don't. They think banking is banking. I guarantee you banking is not banking. There's commercial banking, microfinance banking, community banking. Now there's what? Crowdfunding. There's fintech banking, and all of those are all viable. So just to direct the resources to the right place.
Thank you. Thank you so much, gentlemen. Thank you. We are hard pressed for time, so we won't be taking any further questions. But thank you for the insightful and very passionate discussions. Thank you so much. We'll be closing this session now, and we'll take pictures outside, and then let's Ola take it up from here. But like to your point, the NASG and ZQuest will work to also put in place action points and communiques out. Thank you so much.
A round of applause for our amazing panelists. We learned so much. From the very start of the event, it has been clear that there's a lot of work to do. And I think connecting the dots is the most important thing. Oh, our panelists, please, you would need to step out for additional photos. Please indulge us. Our panelists, please. Is that going? Okay, so we'll go right ahead to our second plenary session. The theme for this session will be attracting foreign capital to Nigeria post-pandemic. Sorry, our panelists will need, and Mr. Amzat. You still need to take pictures outside. Yes. Yes. Okay, so we'll go on to our next plenary session where we'll be discussing attracting foreign capital to Nigeria post-pandemic, and I will be introducing the next set of panelists, and we need to show them some love with a wonderful round of applause as I introduce them and get them on the stage. Can we have some silence? So the first panelist I'll be bringing on stage will be Mr. Monday Usi Ade. He is the Director of Market Development, Department of Debt Management Office. He holds a degree in economics and law. He's a chartered stockbroker and a member of the Nigerian Bar Association. He's representing the Director General of the DMO, Mrs. Patience Oniha. A round of applause for him, please. Welcome, sir, yes. Next on the panel will be Mr. Sam Ocheho. He's the head of Global Markets, Stanbic IBTC, and former president of the Financial Market Dealers Association. He has over 19 years of strong trading experience, spanning money markets, foreign exchange, fixed income ALM, and a brief stint in commercial banking. Sam has been actively involved in development of the Nigerian financial markets via his membership in the Financial Market Dealers Association. Round of applause. The next panelists, we finally have a woman, Mrs. Yinka Adelekan. She's the managing director of Agusto & Co., Nigeria's foremost credit rating agency. Yinka is a finance professional with prolific experience in corporate banking, risk management, business development, managing businesses for value creation, and financial analysis. Her background spans analyzing banks, insurance companies, leasing companies, mortgage institutions, and commercial and industrial companies. Finally, we have Mr. Uche Ugbo. He is the treasurer of Titan Bank. He has over 16 years experience spanning trading, sales, portfolio management, derivative structuring, and balance sheet management. He started his banking career with UBA, then moved to FBN Limited, where he handled responsibilities across branch operations and marketing before moving to join the treasury team. He's a pioneer member of Titan Trust Bank. You're welcome. To moderate this session, we will have Mr. Tosin Ayon Falu, Senior Manager, ZCap Partners.
Thank you. Good morning. I think it's still morning. Thank you for joining us. And I feel very happy and privileged to be on this panel, especially with the caliber of people that I'm going to be speaking with today. I think what I would do is jump right into it. We're talking about attracting foreign capital to Nigeria post the COVID-19 pandemic. Maybe just to give you an indication of what we're trying to talk about, foreign capital importation to Nigeria has dropped about 71% since 2019. So we're talking about figures from around 23 to 24 billion in 2019 to less than 6.7 at the end of last year. So you can see that there's a real gap that Nigeria has suffered, and we want to discuss issues around that and see how we can activate or bring Nigeria back to the forefront when it comes to investments in the Nigerian economy. My very first question would go to you, Uche. What do you think are the impediments to the Nigerian financial market, that has sort of dissuaded foreign investors from bringing capital into Nigeria?
Okay. Thank you, Tosin, and thank you, everyone. I think in the first place, we need to, I always say, I recognize that foreign investors are not here for charity. And so they are here for business, ultimately revenue. Secondly, it's not deliberate to transfer technology and all of those developmental goals that you expect. So which means it's imperative that the host countries, right, must be strategic enough to channel the benefits of foreign investments directly into sectors that ultimately deliver the goal that you want. Now, when I look at foreign investments, I want to break it into two. My focus today will be a lot more on the FDIs, which are the foreign direct investments, than the portfolio investors, right? And the reason is, for portfolio, for me, I just call them hot money. They just come in very brief, very packaged, and as they come, and they go, right? And the motivation is completely different when you talk about the portfolio investors to the direct investors. So my focus will not be on FPIs today, right? But typically FDIs. And Tosin is right. When you look at the last 5, maybe 6 or 10 years, we've steadily declined. Now, the first thing that comes to mind is forget COVID. Everybody in Africa was caught up in COVID. Everybody in the world was caught up with COVID. But if I look at Nigeria, look at Egypt, look at Kenya, and look at South Africa, or let's remove South Africa because in our minds, South Africa is slightly different. I don't agree, but in our minds. So let's pack South Africa aside, right? So if you look at Egypt and look at Nigeria and one or two other African countries, it's obvious that we are not there, as it were. Now, the first thing that comes to my mind is perception. Because I'll be very blunt here, but yet political. Now, the reason I have to be blunt and political is that I recognize a number of things are happening from a regulatory perspective and all of that, but yet we are not getting the traction that we expect. They've been, what, 1-for-1? We did a 1-for-1 one time. They did a RT200 right now. There's a lot of intervention and all of that, but we're still not getting what we expect. So my first view is perception is a big problem. Whether we can argue it or not, but I think in the minds of the average investor, if I look at Nigeria's trajectory in the last 5 years, I still don't feel comfortable bringing in money here. And it's not because Nigeria is no longer the giant of Africa. It's not because we don't have the population, as it were. It's not because we don't have the level of demand. I had a client that's been in Nigeria for the last 40, 50 years, and they make good money in Nigeria. I've heard a foreigner once say, I don't understand it. Nigerians, and permit me to use this word, japa. And so Nigerians typically want to japa. But there are 1 or 2 or 3 people or a number of investors offshore that are coming in to milk the system. So why are we not getting the kind of traction? So I think investors generally just feel that there's a very funny perception about how the system is. 1. 2 is, let's look at the ease of doing business. Now we can celebrate it and say in the last couple of years, we've moved from what, 159 to 141, we're probably 131, 132 or thereabout. But I look at the nearby Tunisia, I look at the South Africa, I look at the Ukraine that is at war, and 1 or 2 other African countries, and I see that we are not yet in that league. So an average investor comes in, and the first thing he wants to think about is what sector, what are the kind of policies that you put in place and all of that. So at a very high level, I'll simply say, apart from the perception, another major impediment that I see is what investors will call policy inconsistencies, right? And one other thing I think is very tricky is, and allow me to say this. So we sit back, have a PIB, and we expect that it will open up the investment up in the oil and gas sector, right? And then we roll back 3, 4, 5, 6 months after and say, you know what, we're introducing back a subsidy. So if you sit back from outside of where you are as an investor, in your mind you think, okay, now I can come into this sector, I can come into this other sector, and then there's a level playing ground and all of that. There are regulations that can guide what we can do. And then the next minute, it seems like it's not going to happen exactly the way it's been said and all of that. Now, there will be very genuine reasons why you might need to roll back. There will be very germane reasons why it might not be as straight for your system. But the fact of the matter is that for the guy that invests and from where he sits, he just sees the fact that if you can flip at 1 minute, then nothing stops me from getting flipped when I come into the system. And the biggest risk to any foreign investor is political and regulatory risk. And I dare say today that in the last 3-4 years, adjusting the impact of COVID, and I'm deliberately adjusting the impact of COVID because it hit all the sector, it hit everybody from banking and all of that, but banks still declared profit, some other sectors still able to raise certain stuff. So if I discount the impact of COVID, I think political and regulatory risk still plays significant impediment as far as the system is concerned. Now, one more area that I think I want to speak to before I drop the mic is if you look at our demography, right? I was saying to somebody 2 weeks ago before I got this call, and I said, it's not enough to have the population. So if you have your per capita income below what? 500, 400? So even if you invest capital, you invest machinery, and all of that, the consumption pattern, the ability to get back from whether it's a production capacity or all of that, you don't have it. Because the guys that will need to spend the money for you to make your money, they are not even empowered. Structurally, we have gaps. Today, and in the last panel, was very clear. You can't afford to fund a green field. Today, even a brown field is a problem. Why? Because who are you going to give money to? Even the clusters, and I heard the panelists talk about clusters and all of that. Now, from where we see it, because we are using people's money to make money, it's very important that we can get the money back. So when you don't have that level of empowerment in terms of the people that can drive consumption and drive earnings, then from an investment perspective, there is a challenge. And then finally, I think it's important to also look at the cost of doing business. So I know even banks, companies today, you hear once it's 6 o'clock, you shut down diesel prices, you generate your own power. I don't even want to go down into security and all of that and how that significantly impacts the ecosystem. I think it was sometime 2 months ago, 3 months ago, if I'm correct, that they said 24 in 36 states completely lost FDI investment, 24 in 36, right? So I think all of these structural bottlenecks from regulation to perception to demography and all of that are significantly in the last couple of years. Because I think from an FDI perspective, for example, we've dropped from maybe 7.6 to, and as of 2021, if I'm correct, is somewhere around 600 and something million, right? So that for me have just been the gaps that we have seen in the last couple of years, and I think it's important as we get down to the aspects of the conversation, we can talk about how we can reverse some of these things, and if for anything, compete with an Egypt that some years ago they came from democracy to a military rule, and there was chaos, there was uprising, and all of that, and they were still able to find a way to get out of the noise and still attract significant level of investments. Thank you, Tosin.
Thank you very much for that. There's a point you made that you ended with about Egypt, and I would maybe use that to lean into the second question, which I'd like to pose to Sam. And that is about, you know, looking at Nigeria in comparison to our peers, you know, other countries in the emerging markets. You know, what is it that, because he has taken a full view domestically, what it is that we've pretty much failed at. And so what is it that a foreign investor would be looking at in other countries that they see lacking in Nigeria? And so basically, what can we learn from that?
Thank you very much. I'd like to look at it from the first point I'd like to put across is the issue of foreign exchange liquidity. I mean, foreign investors will always bring in foreign exchange in whatever currency it is. And remember, we're talking about attracting foreign capital. So we'll both be looking at the FDI space and the foreign portfolio investment space. In 2019, foreign portfolio investors accounted for about $16 billion in the country. Today, it is about $3 billion. The first question you ask yourself is, yes, the central bank is doing everything possible. Why are we not attracting capital? Few logistic issues. If I look at the FX rate today, the foreign investor is meant to bring FX into the country at 417, right? But when the foreign investor is about to go out, it gets rate at ranging from 440 to 442. Even before bringing in his capital, he has lost 10%. So for an investor of for such foreign investors, what asset is he about to invest in that is starting with a negative of 10%? You can see that that is already a problem. And then, you know, whenever people talk about allowing proper trading in the market so that the currency can find this level, the first thing that comes to mind is you are talking about devaluation. If you have that perception, it means that there's something wrong with your structure. It means you know that your price is clearly not at the level it should be. Because allowing the market to trade is necessarily not talking about devaluation. It could also be, an appreciation of the currency. And the market, if it finds this level, you could attract more flows that could lead to appreciation. But the first thing that comes to mind is that of devaluation. Yes, and the fundamentals are not just there. Our revenue base is principally oil. The whole non-revenue, the non-oil revenue, it's a long-term play. It's not something you legislate into being in the short run. The necessary infrastructures must be able to be in place for us to be able to export and earn revenue from all this non-oil base. Today, it is not. I can see it. And I don't think we're working towards it as much as we do. Yes, the central bank is doing everything with the RT200 to be able to attract more currency into the market. Then you find out that even though we don't talk about the parallel market rate because we're not meant to talk about it, you find out that it exists. And a lot of us in this room play in that space. And then the rational man is seeing 417, is seeing 570 or 580. And that gap gives room for fake documentation and everything. Right? It's just something that is the natural instinct. The man wants to arbitrage the market. So all the people that are meant to bring money, why do they want to bring money at that 417 when to them the 417 is not the real level? So it makes them not wanting to bring money into the country. Then you want to look at Egypt. Immediately after the whole military stop, they adjusted. They allowed the currency to find its level. So instead of people coming to Nigeria today, looking at that devaluation experience that has already been factored into Egypt, people would rather go to Egypt because the yield is even better than ours. So devaluation has already been factored into their price, and then they have a better yield. Same with Ghana here. In Nigeria, it is real negative. The real interest rate is negative of 12. In Egypt, it is positive of 6. In Kenya, it is positive of 2. So you ask yourself questions. Is Nigeria a desirable destination at this point? But again, I think our own rate policy has kind of shut them out. Maybe deliberately, maybe not deliberately. But I won't come in at 417, and when I'm going out, you will sell to me at the official market at 440 or 452. It doesn't make sense. And you see, these investors are never afraid of appreciation or depreciation. They've already priced those things in their thinking. So if you allow the market to work as it should, it will naturally find its level. That is it about FX. And again, before I leave FX, you just think of the various rates, the Smith rate, the interbank rate, the rate for PTA, so many. Even though I can just grab them and say CBN rate, interbank rate. But in that rate are so many sub rate that, so the exporter now, even if the exporter sells as 417, it grabs 65 naira. That's a different rate on its own, right? So the exporter will be at 417 plus 65. Even among the exporters, if you sell to your subsidiary or your own people, you get plus 35. That's the second rate. It might not be intended, but that is what it is. Then, you know, the issue of tariffs again, I think in Nigeria we are very easy. We throw the when we need to deal with somebody, we deal with him. But look at the MTN fine. Look at the multi-choice story. Yeah, as much as we package it and make it look as if we are being nationalistic or is our Commonwealth, the foreign investors are watching the space. It also deters them because the way things are going in Nigeria, should I truly be in Nigeria at this point in time? So we need to ask ourselves those questions. Ease of doing business in Nigeria, just as Uche said. Nigeria is 131. The people that are, that we are ahead of are the likes of Congo, Somalia, Chad, Cameroon. Others are far better than us from an ease of doing business index. And these are not my index. This is the World Bank index, so we're talking about facts here, right? Look at the people we are better than. Yeah, we talk about being giants of Africa. Now, as Nigerians, we are naturally proud and arrogant. We believe we should be the top guys in everything, but everybody seems to be leaving us behind. And we keep claiming to be the giants. Honestly, I think we are just a giant dwarf, if you ask me. And we are not looking at these things to solve it. Corruption everywhere. To register a company, people will bribe and bribe and bribe. Every place you go into, there's one cause. Ask yourself a question. Why is a company like Unilever thinking of a manufacturing hub in Ghana as opposed to Nigeria? Why? The cost of doing business is high. We must face these these fiscal issues. Look at infrastructures, power. We're talking Dangote refinery. They're thinking of their own private power line to be able to power it. Those are additional costs. Everybody, today, generating set is the main source of power. Electricity is backup, right? Why is that not, why can't we fix it? All those things add into the cost of doing business. Diesel costs, very, very high today. They add to the cost of doing business in Nigeria. So with all this, how do we really attract this capital into our country? Other countries have done better, the Egypts, Kenyans, South Africa. Look, as much as we say South Africa, we don't want to say, look, they've left us behind. Let's be realistic and tell ourselves some home truth. And when we do that again, it comes back to this, our natural pride. Instead of us to fix the stuff and do the right thing, we know it's not possible. No country can be like us. The facts are there. We cannot argue with with what the facts are, So we must solve all these problems if we must attract capital away from the other countries. FDI today, as a 2021 NBS figures, is about 698. I'm sure in 2022 it's probably going to be less. These figures were way higher than that before. How many the multinational companies in our country today, how many of them are truly expanding? Even when you see some of these figures we are seeing as FDIs, they are just in and out. Some of them bring the money maybe as loans and use that same money to pay for their import obligations. Who won't do that? Why do I want to bring money into the country and let it be sold to another when I have a lot of import obligations? So all those things we must look at. If we must attract capital, we must make the environment to be business friendly. We must look at the fiscal issues that are tearing us apart. The corruption that has become so endemic has to somehow, I don't know, but we just have to look at it and see how we can sort it out. We have to make, when some of these foreigners come to Nigeria, it's like a separate MBA class on its own, just studying Nigeria. The FX environment, we have to look at making sure that we consolidate all our rates and align the market to trade and find its level. And by trading and finding its level, nobody's saying depreciation, nobody is saying appreciation, but the right level will be judged by the fundamentals that exist in our market. Thank you.
Thank you very much for that. Mrs. Yika, I saw you smirk a few times when you were speaking. Do you want to add a few points?
So maybe my own strategy of answering the question is, let's look at the number one attractor of FDIs in Africa, and that's Egypt. What has been their success? In 2017, they passed a business-friendly investment law that allowed foreign and domestic companies to operate equitably, fair treatment. That means the foreign companies were not deemed to be at an inferior position. What did they do again? They allowed tax reduction for foreign investors coming to invest in Egypt, as long as you're able to invest in healthcare, CSR, and even environmental protection. And they gave them tax reduction on this. That is also a leg room, because what are you doing? You're pursuing sustainable financing. In addition, what Egypt did was to improve on their fiscal position. So you find out that they introduced VAT to try and budget their books. And you will see a lot of structural reforms. So he's clearly said it. They allowed the exchange rate go from managed to flexible. The currency devalued, the Egyptian pounds devalued. But after a while, it stabilized. At least from March 2021 to March 2022, there was stability. But I think by the end of March, there was a 14% devaluation. So Egypt did that. And if you go to Egypt, there's been a lot of investment in infrastructure, a lot of investment in roads. And what are they doing? To try and lower the cost of logistics. When you lower the cost of logistics, you're lowering the cost of doing business. If you also look at Egypt today, about 5 years ago, they had the same power outage issues that we have. But with deliberate investment into power generation, Egypt is now an oversupplier of power. They supply power to Sudan. They are in surplus of 25%. And so you can see that in 5 years, they've gone from being ranked on the ease of doing business from 131 to about 114. Nigeria is now on 131. So we're where Egypt was 5 years ago. And these structural reforms has made a lot of foreign investment, whether it's from the Middle East, whether it's from Asia, whether it's from European zone, into Egypt. So all we need to do is look at what Egypt has done, and let's start to tick the boxes. And I think it will make a lot of headroom. Thank you.
Thank you very much. When Sam was talking about Nigerians not accepting our true position, you know, my chest too was paining me when he was talking about South Africa and when we learn about what our neighbors are doing. But I think what is most important is being able to learn from these, I think the way to describe them are tough decisions. You know, these countries have looked within themselves and said, these are where we are lacking, and you know, what can we do about it, and have decided to take in those tough decisions. At the time, they were tough on the people. You know, the normal people in Egypt felt it when there was a devaluation. We were hearing about it all around the world. But not so long down the line, 5 years, and we can see the benefits from that. It's also about policy, maybe having a tougher stance in your policy direction. Look at Ghana recently had to take in what did they do? You know, an e-levy, trying to have, you know, adjust their spending and revenue immediately. There's a problem. The foreign investors had shown it in the way that they were treating Ghana as an investment destination, and immediately steps were taken. So those are the kind of things that we are learning from other countries in the emerging markets space. And so, you know, that means it's a very important thing for us to look at policy, and those who are in places to take these decisions that can help boost our position when it comes to being an investment destination. And that leads me to my third question for Mr. Monday. How can the Nigerian financial sector retake its position, you know, as the favorite destination for foreign investments in Nigeria, especially FDI? I'm laughing because we had a conversation before this.
Why are you laughing? You know there is nothing to retake. They have never been ahead. So the issue of you retaking does not arise. So thank you for that question. And I want to speak from the standpoint of my job, where I issued Eurobond on behalf of Nigeria, and I'm in charge of investor relation and management. I also do product development. Normally, for us who assess fund on behalf of the government, we have opportunity to meet local, foreign, both portfolio and resettle investors. Okay? And we interact with them on an ongoing basis. I had a call with a company in Dubai just yesterday. And there were basic questions they were asking us. Very basic questions. I want to disabuse your mind. It's not even security. Security challenges everywhere. Every country has its own. They don't ignore it, but it is there. Nobody asks you how are you going to fight, how are you going to stop security. No, it's not that issue. It's one principal issue which they were spoke about, capital control. Simple and short. Money has a value. And if I want to give it to you, I must know the value I want to give it to you and get it back from you. It's period. Whatever you are doing around that is ephemeral. Everybody wants to put his money where there is certainty of value. And if I don't know your policy tomorrow, I won't bring that money to you. So that is the major factor that is limiting our ability to attract investment, whether portfolio or foreign direct investment. When the hot money comes, it comes quick and leaves quick. It doesn't want to stay. But the real set of people, and looking at take away geopolitical risk, the only time we overtook Egypt in FDI was during the Arab Spring. That was the only time, 2010, 2011, when it went negative. After that, they had remained consistently above Nigeria. They took on a painful IMF adjustment program, but Nigeria said they don't want it. Very painful. But today, Egypt is on the run, leaving us behind like somebody said, 5 years. South Africa, yes, they've arrived, they have been there. Take away geopolitical risk that they are experiencing. They are far ahead of us in so many dimensions, all because of the price of money. You either get the price of money right. None of us here will put your money where you are not sure, and I repeat it for the 100 times, you are not sure of the value you are getting back. Whether you want to give it to a organizer, like they said, or you want to give it to the market, you want to be certain about what am I getting back from you, what is the value. So that said, so we need to look at our capital control issues. The second real issue that we have confronted is subsidies. Okay? We subsidize everything. And I want to repeat it. I'm a government officer and I know what I'm talking about. And of course, I'm a Nigerian as well. And I want to be honest to myself. There is nothing we don't subsidize. Because once you subsidize money, you are subsidizing bread. We subsidize road. We subsidize electricity. And no investor wants to enter those sectors. That's why you have to buy your generator to be able to run your business. Because no investor, you who are a banker, can you today lend money to Ikeja when you don't know the price they're going to sell electricity? That's why they're not attracting funds. And that's why foreign investors are not interested in that sector. But get the price right. There are two issues here. One, you either want to run a closed economy or you run an open economy. There is hardly any middle of the road solution to it. Choose where you want to be. The global economy is getting highly integrated, becoming people say one global village. We're trying to build a Lagos financial center. Fine, good idea, fantastic. But let me just give you a little bit of a challenge and which all of us need to talk about. From my standpoint as product development, okay, we'll try to issue a dollar bond. Somebody will say, you want to dollarize the economy? No, none of us here would have not handled a dollar note. So take away dollarization, it's not an issue. But there's one piece of legislation that you need to look at, and that is Foreign Exchange Control Act. That law says, and that's one of the laws hindering our tourism sector today. It says you cannot bring in more than $10,000. If I'm coming from the US with my family of 5, what do $10,000 do for me? To stay in Nigeria for 1 week. It doesn't help us. That law was made in 1995. It's still guiding our foreign exchange transactions today. I want to come with a family of 5 from the US. If it's more than 10,000, I have to declare it. Why should I show my money to you? Yes, they're intended. There are good policies at that time, what it was meant to solve. But things have moved on. You cannot use that money to do anything other than withdraw it cash. It has to be cash transaction. So, and my people say, look, let's go and do a dollar bond. I looked at the law, looked at everything, and I said, but there's this piece of legislation. Let's look at it. If you issue the security, are you going to collect this? Are you going to collect the investment in cash from them and pay them back in cash? It doesn't work. I hope we're on the same page. It doesn't work. So if you are talking of attracting foreign investment, 2 things. First, we have local investors. Are they even investing? Before you go ahead, before you go and look at, we've talked about the bankers here, the SMEs and Nano. And because there was no time for question, please permit me. Since 1990, we've started with Rural Bank, People's Bank, targeting the poor people. Have we reached them? Something is fundamentally wrong with the way we think. Our systems are not designed to solve problems, but rather to create it by trying to solve it. So what we should be looking at for you to, beside the ease of doing business, is make a choice between openness and closeness. Then each of them have their consequences. Be ready to face it squarely and work with it. Otherwise, we'll continue to do catch-up. I call it catch-up. As a nation, we'll continue to do catch-up. Take away the issue of whether there is a political will or not. That it's you and I who are having the debate on the street, whether we want to remove petroleum or not. It's we who say no. And when we say no, they hearken to our voice and agree. So yes, they said no. So who does it benefit? Who does tariff on subsidy on electricity benefit? These are things hindering our revenue base, that it has continued to make us to accumulate more debts. And for us, this needs to stop if we want to run a sustainable economy in terms of we putting the right policy, the right decision, and putting it in the right sector. PPP, we said yes. There are people who are looking forward to funding our roads, but our roads are being subsidized. All of us here travel. Which road you do pass, you don't pay toll gate. You don't pay toll gate. Go to the airport here. From in Gambia, in Senegal, for you to get to town from Senegal airport, you pay toll gate 3 times. Senegal here. 3 good times. As you get nearer the airport, it becomes more expensive. It's designed that way. And there is nobody manning the toll gate. No human being on the toll gate. You buy your card, put it on top of your car, and as you come, the gate opens for you. Senegal, Dakar. The same thing across most of these African countries. So let's face the reality. Nigerians like free things. And those free things, people say, will normally purge you. So it's either you take the medication properly and get hit, or you continue to be purged. Thank you.
Thank you very much for that, sir. Uche, do you think, from the private sector point of view, there are other things that we can, work towards putting in place to try and improve our position in terms of being an investment destination globally?
Okay, so allow me go back to 2004, 2005, pre-consolidation. And I think one of the cardinal points during the consolidation, 25 billion and all of that, was to create one thing: help Nigerian banks get to the point where they can fund long-term capital projects, right? Now, if I look from 2005 to 2022, we've probably gone up and then moderated lower, right? Excuse me. So I think two things are very critical that we must do as a private sector driven stuff. I have no doubt in my mind that government has no business doing business. I, for one, stand by that, and I can stand and debate it anywhere, right? So it then means that from a regulation perspective or from a regulator perspective, we need to have very strategic synergy between the regulators, and I'm not using government, I'm using regulators loosely, right, on the private sector. So take, for example, some of these subsidies we've talked about and all of that. When Lekki Toll was being constructed, I know it was private sector funded, as it were. A number of banks funded that project. And after a while, it was turned over to the government. And I know Lagos State government today runs that, well, LCC runs it on behalf of the government. So some of the partnerships you talked about, the tolls and all of that, when the private sector can deliberately get into the scheme of things, then we can make it happen. I am aware that Dangote, for example, have been granted concession to run some of these roads and all of that, and it brings some form of tax incentives. So nothing stops both the banks, the non-bank financial institutions, and the large corporates to pull together to make these things happen. That's one. Two is, I think it was the CEO of Stanbic IBTC that said something very profound. The system in Nigeria is not encouraged or is not designed to enable us export, as it were. We are probably more designed to consume than to produce, right? So I think we need to be deliberate around enacting laws or bringing out policies and all of that that can guide that. We are very agrarian in nature. So I was talking to an exporter who was talking about cocoa, and he says the best you can do anywhere in the world from Nigeria is to export the cocoa, because the guys that are heavy in chocolate will probably go to Ghana and go to Nigeria, right? So we need to redesign our mentality as a people, and every time we say the government, I like what you said, which is we. It's actually we. Whether from a practitioner perspective or from the regulator's perspective, but we are the ones that will help the people. Why did we go back to subsidy, for example? I remember when Jonathan did subsidy was going to be removed, or they increased the price of fuel, we all gathered at Freedom Park, and there was a movement. And then in 2015, Buhari stepped in and moved the prices up. Nothing happened. The roof did not come down. And then we said, sign PIB, remove subsidy, and what then happened? And I'm sorry to say this, election is next year. And then in 2022, you withdraw it, and then do what? Kick the can down the road. That's what we have done. And then you borrow 4 trillion. 4 trillion to fund subsidy. To what end? And then the guy that's supposed to invest will sit back and look at you and say, you will borrow 4 trillion. I remember in 2015, we were borrowing money for recurrent expenditure, pay salaries as a people. And then you come back to a population of what? 100 million people off the job grid, and you want to raise taxes on who? Because if you take the high-end corporates, you've given them some form of concession and all of that. you've pre-funded them. We have done intervention funds at what, 5% and all of that. So who will now pay the taxes? So I think fundamentally, as a people, and why some of us will talk about will, and it's not just will from the part of the government, I think will on the part of all the stakeholders, whether it's the private sector or the government, we need to redirect some of these things. You talked about Egypt taking the bitter pill. At some point, we will have to take the bitter pill to move this country forward. So I think from a private sector perspective, and thank God for forums like this or conferences like this, I know without a doubt, there was once upon a time, Otedola and a group of people sat down and said, let's raise money to do what? To fund, I think it was COVID, in the time of COVID, where you had to channel funds to some people. If we can raise that, and allow me also to say, Davido sat down one day and said, what? If you're my friend, give me how much? And then the guy raised what? 200 million or whatever, I can't remember. That's an artist. I wish we can come together and say, you know what? Zeal said something, you have your G-Wagon and your Lexus and their potholes, and you just bump past it and you just walk away. So what stops a group of people from saying, man, this road is bad, we need to fix it? What stops us from, as a people, doing a very small bit, and we can challenge the government? So I think, one, private sector, we need to come together more effectively, and then from a regulator, I think it's very critical. And I don't want to go back to FX because, to be honest, some of us will stay awake at night and sometimes you weep at where we are today. My father was a banker for 22 years, and if I sit back and look at what his pay was and what exchange it was at that time, when he came out of the university and when he left banking, he was impoverished because he was more Naira based than foreign currency based, right? You talked about Eurobonds. We're going to issue Eurobonds. Who will invest? I don't want to ask you the configuration of the investment, but I'm almost certain that it's probably skewed more to local funding than offshore funding in terms of if you look at that number. So which means even if we had that funding, what's the makeup? It's probably the same set of people that drive the numbers and all of that. So I think it's expedient that we also contribute our quota. I know in the US there's something, it's not lobbying, but you have support group, or maybe you call it lobbying, and it's a stylish way of calling it out there. I don't know what we'll call it here, but I think stakeholders need to have vested interest in regulations from a patriotic standpoint, not a nationalistic standpoint. A nationalistic standpoint, in my view, is when you have more of a closed economy. A patriotic standpoint, in my view, is where you know that we need to move forward as a people. This is either we do it or we die, right? So I think from a private sector, we need to make that happen, and I have no doubt in my mind that there are people in the private sector that are willing to galvanize as long as there's a will on the part of the government and regulators, and we'll be able to move the needle at least closer to where we said Egypt was 5 years ago. Thank you.
Thank you very much. Mrs. Zinka, let me ask you around the financial sector in particular, because if you look at the makeup of people in this conference and people that are on this panel as well, we are largely players from the financial sector. And so I think it's important to maybe drill it a bit closer to home in terms of what roles players in that sector have towards motivating a sustainable flow of foreign investments, and more importantly, retention of that. You know, because it's important for the money to come in, but it's important for the money to do the work that it's here for, instead of, like we've said multiple times, hot money in and out. So what roles do financial sector players have in doing this?
Okay. Thank you very much. I think before I go into that question, that I would like to rephrase a bit. I want to say clearly that it's not all gloom story. If you study the FDI, Nigeria is actually the first in terms of FDI for fintechs. So as of 2021, Nigeria was able to achieve $536 million, and that was investment in the fintech space. The second country was South Africa at about 207. And I know the IT, Professor Yinka would help me tell me if my data is right. So we are doing something right in the fintech space. And what are they doing? They have invested in platforms and infrastructure that helped in terms of settlements. But what does the environment need to do? We must ensure that the regulation governing the fintech must be such that stimulates and continues to stimulate innovation. Because the truth is we have it right in that space. And as long as we continue to have a young, thriving group of Nigerians that continue to pursue alternative ways of doing business, whether it's digital, whether COVID has accelerated it or not, we would continue to enjoy foreign direct investment. And despite the foreign exchange issues that we have. And that's because these foreign investors that have invested in the fintech space have taken a long-term view. They see the value they're creating, they see the size of the market, and they've taken a long-term view that these companies will thrive. And my prayer is that they do not disappoint us. But it is clear that we have a bright spot there, and regulation must be such that it continues to stimulate that and to ensure that we have it. So in terms of the question you just asked me, I would rephrase it. What can the financial sector do to attract and retain foreign direct investment? I think Uche was the one who talked about it. He talked about advocacy. All the financial institutions, whether it's the banks, the insurance companies, must not fold their hands. We are the Nigerians. We must be able to, talk to those in regulation or the regulators that we must attract foreign direct investment. We must be able to create avenue that there's efficient repatriation of the profit after tax. After they have paid their taxes in Nigeria, they must be able to repatriate their dividend. So the financial sector must ensure that there's an efficient service system in place that allows them to repatriate. We must speak to regulators in terms of the foreign exchange regime. Is it working? If it's not working, we need to make them be aware. Also, issues of taxation. I talked about Egypt. One of their successes is that they've allowed foreign investment into their country that goes into healthcare, that goes into environmental protection, that goes into CSR. They've given them tax reduction. We also can advocate with the regulators to give them this kind of, this kind of tax incentives that would encourage this particular foreign investors to come into this space. Also, as foreign sector players, we must ensure that we do the right economic intelligence. The foreign investors don't know the sectors that are key to our economy. They don't know how to navigate the regulations. As foreign investors, whether it's investment banks, we must position ourselves in such a way that we give them the kind of information they require, the sectors that are bright spot, the sectors that would render competitive returns. I think Uche or my other colleague mentioned it when he talked about the banking sector. The banking sector has been resilient. Despite all the cash reserve requirement and all the various regulatory charges, the industry is still posting 20% return on equity. It's rare to find any other. The insurance is not doing that. So it is clear that there are some sectors that are resilient. So we must provide the economic intelligence to the prospective foreign investors that want to come in, to say, look, there are sectors, guide them, give them the information, and help them navigate the regulatory terrain. Because the truth is, in every emerging market, the regulatory terrain is tedious to navigate. So they need people to hold their hands and help them navigate that aspect of things. Also, the foreign investors that want to come in, they typically want to work with financial institutions that are sound financially. And so for me, from my own rating angle, I would say have good credit ratings. Why? The foreign investors want to feel safe. They want to be sure that the the financial institution that they're doing business with is a safe institution, and therefore they are sure that in terms of handling their resources, they have the right partner. So for me, what I would say is it's not really about, it's about the financial sector being able to attract. The foreign investors are there. They're looking for markets. We must be able to attract them, and we must be able to retain them. And the only way you can retain them is to help them navigate the regulatory terrain. Thank you.
Let me just make this comment. Now, talking about making Nigeria a financial center. I just want, I thought I saw the invitation of FMDQ and NGS. There's one thing that we will also be very, very, very careful, conversant about. The issue of ease of movement of capital. We're talking of, we have a capital market, an equity market, equity market. We also have it in the OTC platform for trading of FGM bonds and securities. Now, to what extent can somebody in Ghana, okay, sit in his house and trade our equities or buy our securities? These are issues. We need to move towards, I know efforts have been made by these agencies and all that. This needs to be fast-tracked. Again, come back to the issue of regulation. That is some big bottlenecks that they are still trying to deal with. So my own recommendation is that as private sector practitioners, let's look at 10 years from now, where do we want to be as a country? Some of us are already about to leave the stage. The young ones, 10 years from now, where do you want to, will you be able to sit in your office, on your laptop, buy Apple shares, and seamless settlement? These are issues that we need to consider and deal with headlong. Otherwise, movement of capital, like I have said before, is efficiency. That the system is efficient, is determinable, is predictable. It is something I can know the outcome with minimum probability of the degree of risk is something I can deal with. But if it's something I cannot deal with, I won't go there. This is a banker, Abi. You won't go there. Again, let me say that, and I want to reemphasize this, in our systems, our institutions, both private and public, the structuring, the reason why they are set up, it's not to solve problems. We have not been solving our problems. And I repeat it, I'm a civil servant, and I'm speaking as a Nigerian. Okay, we're not, the banks are not structured to solve problems. I walk into a bank and somebody tells me, my money, which I gave you to keep, I need to, that my signature, I'm standing before you. First, you are seeing my picture, you say my signature is irregular. It doesn't make sense. You are seeing me physically, standing before you, sign something, you say it's irregular. And the picture shows that this is the person. That is the mentality that we run our system with. We have been trained that an average Nigerian is this. And that's how we sell ourselves. The press, that's how we sell ourselves. We demarket ourselves. We create problem for the next person. Because that is our mentality, and we need to change our orientation if we need to move forward in every sector. In every sector, we need to change that orientation to a solution-driven mind. There's a problem here. The issue of the pothole. How do I make money out of it? And you see the person doing it, first thing is that he's doing it genuinely. Leave the rest. Of course, genuinely to make money for himself and for his family. If you can do it before him, fine, but he's ahead of you. Allow him to do it and go and look for your own opportunity. That is the way you should be. In that way, where am I going? We will be able to grow our economy. And let us also, please do one thing. As much as possible, let's be sure that we are citizens first, before any other thing.
Just to quickly add one or two things to what my friend here just said. You know, we are already there in terms of being able to sit in the comfort of your room and being able to buy some of these foreign instruments. But the main issue remains the capital control. The likes of Bamboo, they found a way to be able to buy foreigners. But what rate do they use? Is it the official rate? Can they actually find liquidity using the official rate? They can't. So they've already priced it in. But then capital control says they cannot do that. So capital control, like you suggested the other time, remains the key issue around being able to attract capital into the country, you know. Then just a cheeky one on the signature stuff. You see, it's because of who we are sometimes. Yes, you are the one standing in front of me. But again, knowing what we do, people will come, sign irregularly, stand in front of you, collect the money. You bypass that process because you are seeing the same person will go back and sue you that signature is irregular. Then the lawyer picks it up and goes through the nitty-gritty. You know, the law is not about whether it's about the nitty-gritty. The next question is this signature regular or irregular? Then I say it's irregular. So why do you? Then we'll go into those. So many things that makes people, and I think the trust factor, there's a lot of trust deficit that needs to be bridged. And again, I just wanted to contribute to what my colleagues say about handholding the foreign investors. Trust me, it's something that we do very well. And you'll be shocked at the information that is at the behest of these foreign investors. When you speak to them and talk to them, if you're not careful, they know better than you. They know where to ask all the questions. They can see all your figures. They will even draw your attention to things you are not seeing. The universe of information available to those guys, especially when you go on these road shows, you'll be shocked that who is the Nigerian here? Is it me that is coming on a road show, or is it these guys I'm talking? They are so vast with information, and so when they talk, they know what they are talking about. And if you are not careful and you must draw between telling the truth and telling them as it is. That's all they want. They just want you to be able to tell them this is what it is. If you try to show patriotism by defending yourself, they just kick you out of the room because they also know. So, and holding those guys, we do that a lot. And they're very, very vast with the information about what is happening in our country. So no matter how we try to pretend and hide and say, oh, the reserve is our commonwealth, the hot money guys or the portfolio investors are hot money people. They just come for the yield and go. Look, they come for the yield and go. But remember, being able to attract foreign capital or being able to be self-sufficient is a long-term play. While you are waiting for the long term, you must use short-term solutions. So from my own standpoint, the foreign portfolio investors are very beneficial for our short-term solutions. We just have to look for ways to start doing things in the long run to say, look, we cannot continue to rely on short-term measures. How do we put long-term measures in place so that we can become an exporting nation, we can become self-sufficient, and our currency will not be everybody trying to buy dollars because they're afraid of devaluation. Thank you.
Thank you very much. I would try to wrap this up very quickly with this question from someone from our online audience. It's an open question, so I'm going to allow everyone to give a point if they want to. How can we really make political leaders, in bracket the presidency, see the merits of these collective yearnings of financial market experts and scholars, and how can we get them to act accordingly? So basically, these are our conversations and the brainstormings that we're doing and the ideas that we have. How do we transmit it to those who can take decisions that can help us start making progress?
If I know the person, I'll have asked him one question. Does he have a voter's card?
I think I know the person.
If the person has a voter's card, he should use it. He should listen, ask genuine questions about his own future, personal question that affects him as a person. Ask the person campaigning as a local government officer in his own local government. Genuine personal questions. This is my problem. How would you want to solve it? Then if that person says he can solve it, even by the word of mouth, you can vote for him. Then that will translate to the higher level. But if he doesn't have a voter's card, he shouldn't ask that question.
The question is, this civil servant, is he willing to put himself up to be voted for? Because I can have my voter's card, right? And all the people before me, I don't know who to vote for. Because the likes of my brother, he has not put himself forward. And again, the question is it lack of knowledge? I don't think it's lack of knowledge, right? He works in DMO, he's a technocrat. There are a lot of technocrats seated in that presidency. I'm sure even doing Salami, that is a economic expert, is also there. The vice president knows a lot about this stuff. So why are they not doing anything about it? It's also the political will. Everything goes back to what will my people say? What will my people do? So all this issue of subsidy is because of election that we're unable to remove it, right? We'll say the people will cry, the people will say one thing or the other. But somehow, I think in Nigeria, we are very used to removing it bit by bit, bit by bit. Likewise, we do the same with foreign exchange. We say, oh, let's not allow it to move. Let's move it a bit, at 10 naira. People will, but we must take the bull by the horn, do the adjustment. At some point in time, we'll all feel the pain, but we'll probably be better off for it in the future. So for me, it's not about lack of knowledge. It's just the will, and are we, it's about, I think the corruption in the country is just, from our standpoint, is just too much. So who can help us? Whoever wants to help us must be somebody that is willing to die. Because if you go to the presidency and you are trying to remove all those bottlenecks, you know how many people you are fighting. And so you must be ready to tell yourself, look, I'm going there. If I die, let me die. But how many people are willing? I don't know if you are willing to, but...
Thank you very much. I don't know if we have any questions from the live audience here. Okay, I think we don't have any questions from the live audience. And so on that note, I would like to thank all my panelists for being such wonderful people. And thank you guys for being a wonderful audience. Thank you very much.
I think that we have all been good sports from morning till now, and I think the sessions have been very enlightening. Of course, we all agree that the most important thing in the whole context is taking action, taking the conversation beyond this room. I must also add to the conversation around getting your PVC, even if that's all you can do in the whole process. So we move on to our final plenary session for today. And the theme for that session is striking a balance between innovation, regulation, and consumer protection in the financial sector. And I'm sure this is going to be a very good session to listen in on. So we'll be having two panelists. So we have extra chairs, but we'll be having two panelists. The first panelist I will introduce is Professor Olayinka David West. And she's a professor of information systems with almost 3 decades experience in IT and financial services industry, and is a passionate advocate for digital transformation and inclusive finance. Her research and practice engagements involve policy and strategic management interventions toward digitally transformed businesses and society. Professor David West is Associate Dean at the Lagos Business School and sits on the school's management board. She leads the Sustainable and Inclusive Digital Finance Services Initiative, a research and advocacy initiative dedicated to enhancing financial inclusion in Nigeria. Please give her a round of applause. Our second panelist is Dr. Ahmed Tunde Pokuola. Dr. Tunde Pokuola is the Group Managing Director, CEO of CRC Credit Bureau, and has over 30 years private and public sector experience in the Nigerian economy. As the Executive Director, CEO of Abuja Enterprise Agency, he championed the cause of entrepreneurship and self-employment. He has extensive and robust experience in banking operations, finance, planning and strategy, customer service, product development, risk management, and ventures. Dr. Pokuola holds a doctorate degree in finance from WITS Business School, University of Witwatersrand, South Africa, and he is a fellow of the Institute of Chartered Accountants of Nigeria and 7 other professional bodies. He's an alumnus of Lagos Business School, Harvard Kennedy School of Government, and Wharton Business School. Please give him a round of applause. And to moderate this session, we have Mr. Eva Obi, Managing Director of ZFans Financial Limited.
Thank you, everybody, and welcome to this panel. Before we dive right into it, I would love to make a few comments. It's interesting times right now for the financial sector. We have a lot of businesses that have achieved tremendous growth by leveraging the potential of technology. And you even have a lot of other businesses, the old businesses, the elephants, so on and so forth, trying to move away from the bricks and mortar way of doing things. And in all that, we have new startups. We have startups coming up, and there is access to capital. Everybody's thriving, and we're talking about financial innovation, and we have the problem of making sure, are we sure we're innovating the right way? And then we have regulators. Are we sure we're regulating the right way? And in the middle of all these innovations and all these talks, we have the customers who demand to be protected. So the question we're asking is, how do we strike that balance between financial innovation, regulation, and consumer protection in the financial sector? And I'm personally honored to be on this panel with Professor David West and Dr. Tunde Pokuola. And I would start with the first question. I would go straight to Dr. Pokuola. I would want to, but what do you think, from everything you've seen and from your expansive experience in the financial sector, what do you think are the ethical and regulatory issues that are, that emanate from this proliferation of financial innovations? Companies are saying, oh, we're coming up. What are the issues that we can see? And also, what do you think is the role of the government in ensuring that we have this efficient, innovation-driven financial sector?
All right, thank you. Good afternoon, everyone. Thank you for the invitation. I guess this is the last session we are having. I hope we are not tired, because we may want to take you till 5 p.m. because we have an open-end. Seriously, this is a very interesting session, and I think all of us operating in Nigeria are one way or the other affected. Financial innovation in history, I mean, from centuries, there's always been something cooking, something new. I mean, those of us who are into history of economic history, you realize where you started from in Mesopotamia, where you had goods and services deposited in temples, and then they issue you receipt and all of that. But then environmental issues always affect the direction that financial innovation goes. And so today we're talking about all manner of things relating to financial innovation, fundamentally driven by technology. So you have issues around products to payments, you have on lending, you have on investment, you have on savings. And I think those of us who are here and those listening to us, most of us have used most of these innovative ways to either save or to borrow or to invest, as the case may be. So for instance, in payment, you have wallets now. You have your cards. You can, from your phone, transfer money. All of those are going on. For lending, it's the same thing. In those days, you have to physically visit the bank, fill out application. Maybe the branch manager knows the church where you worship is related to you in the village. That's how you get money, but not anymore. Just to give you the perspective, we are trying to connect to, as a bureau, to use our service, a lending institution. And they said 3 seconds is too slow for them to fetch information from my database. That why can't we have it, they call it millisecond, right? Okay, so that's where we are today. And then you talk about savings, you talk about investment, you talk about crowdfunding, you talk about e-money. These are things that we are talking about today. And the players there are not just deposit money banks. In fact, people are beginning to talk about the future of deposit money banks. Whether what we'll be looking at in the future will not be banks, but what the services that they provide. And so we in that mode now. We have microfinance banks, we have micro lenders, we have now fintechs. That's buzzword, fintechs. Now we have pensions institutions, we have insurance, we have now telcos, also now collecting banking licenses. So that's where we are today. Subsidiaries, okay. So what you have seen is that all of these are playing around because of technology, because of the need to have enhanced financial inclusion, and in all of that, you still discover that our financial inclusion rate is still about 60%, right? So there are still a lot of people that are still excluded. And so in the process of doing all of this, the operators, the consumers, there are issues. First is bundling of products to customers who don't understand the products. They don't even understand whether they actually need the product. And so that's one of the first ethical issues to begin to look at. Second is the use of information of people and of businesses. Unauthorized, you collect information, people fill a form or they use the an app, and then you've taken their information without them knowing that you are storing the information. Then there are pricing issues around, people don't even know the inherent pricing, things that are embedded in the pricing of the products they are buying. And so at the end of the day, a borrower pays over almost 200% when you analyze the charges. But he doesn't know, because all what you are asking him to do is you take 10,000, you pay me 11,000 at the end of the month or in 2 weeks. But that's 10% in a month or in 2 weeks. So he doesn't know. And then you have issues around people not even knowing where these companies are. So they don't know where they are, they just latch onto it. So a lot of people have participated, invested through crowdfunding, and those companies have disappeared. That's unethical. There are ethical issues there. So we have all manner of things like that. And then, of course, a more fundamental one is the collections management. I don't know how many of you have not received SMS. Your friend, you have not. That's interesting. Your friend, they mention the name that you don't even know, and then just embarrass the person, and so on and so forth. So these are issues that confront us as we, seem to be enjoying the services, the delivery, the speed, and the access that all this innovation have brought to bear. And when you're doing all of this, then regulators have roles to play. In regulation, 3 things stand out, and the framework must focus on 3 objectives. First is that there must be a way to prevent systemic risk. In other words, the collapse of the financial system. Regulation wants to make sure that that does not happen. The second one is to ensure that there is discipline in market conduct. In other words, the operators in the market must have a way to operate responsibly. And the third one is to protect me and you, the consumers of those services. So when we're talking about regulation around addressing the issues that we have, the drivers of them must be those things I've just mentioned. And it's imperative that this is done. But in doing all of that, regulation everywhere, they do catch up. Because operators are always faster, they move faster, they are more innovative. And because they open all the market, before the regulator catches up, they're already another 1 mile away from them. And that's why it's always difficult. They don't understand what's going on. By the time they understand what is going on, the game has moved to another phase of playing, and that becomes a challenge for them. And I think so these are issues that regulators have. And they also try to run away from not inhibiting growth. They don't want to inhibit growth. They want all those products to be tested in the market and to be sure that they are the ones saying everybody should have banking services, right? So they don't want to do anything that will now affect that particular objective of everybody having access to bank. But in the process of doing that, they allow a lot of things. For instance, today, I'm not sure if fintechs are regulated. There are micro lenders who just go to the state government and collect money lender license, which they renew every year. So they are not accountable to anybody. Nobody supervises them. And there are so many other people who have developed app simply because they want to evade regulation, and they are not there. So I think to start on the conversation is just to say these are challenges that regulation or regulators face, which they must have to address. Thank you.
Thank you. Thank you very much. So I think, from everything you've said, I mean, regulators find themselves in a space where, just like you said, they don't want to inhibit growth. But a lot of times we see them trying to come in to intervene, like what happened with, some of those people that that engage in social shaming as a form of collections, and they had to shut down or penalize some companies. Now, from everything you've said, I'm going to direct some questions from that to Professor David West. You're a huge proponent of digital transformation and financial inclusion. Now, from Dr. Popola's comment, where regulators find themselves in, where they need to, at some point, accept that this has come to stay. Now, how do you think that regulators can embrace the opportunities that digital transformation and technology present in widening access to financial services, while also making sure that consumers are protected?
Okay, thank you very much, and thanks, great to be here. I think there is a myth that regulators don't want to accept technology, which is untrue. And I think if we go back to even the CBN's launching of an e-Naira, that's a clear demonstration of accepting technology. So there's the issue around technology. Technology is a great tool, but it has its good, the bad, and the ugly, and we need to recognize that and be aware of the issues regarding technology. So technology is not a magic bullet for every problem. But if we try and throw technology out there, it's also going to come back and backfire in our faces. So I'm not a regulator. I only work closely with regulators and operators and sort of be that ombudsman and conversation starter around technical issues. And then again, when we look at what regulators are doing, and this is a global problem because Nigerian regulators are no different from other regulators who are also finding the same challenges of, we have several issues when we're looking at fintechs or financial innovations. We have the issue of, first of all, the enabling technologies that we're using. For example, marketplaces, P2P lending, blockchain, distributed ledger technologies, right? They have their own challenges and issues. You have the products and services that you're creating. Again, don't forget that a lot of these products and services are not new. They already exist under one regulatory scheme or mandate or the other. So the challenge is, are we regulating the practice and the conduct or the technology? Okay, and we have to distinguish all those things. The third is, we don't know some of the implications and challenges, so there's a little bit of an unknown factor that we're dealing with. How do we address the unknown? And in regulation, it's really about the practices. We know that financial systems and financial markets need to be regulated because Tunde spoke about integrity, stability, protection, and inclusion, right? So we know they need to be regulated because don't forget that 2008, the global financial system, it took everybody down and everybody out. So we're interconnected whether we like it or not. So we're one financial market that is operating in different countries, but we're all interconnected. So how do we prevent a subprime loan issue that's going on somewhere out of my market that I don't even know where New Orleans is, right? And then it's affecting me in Lagos, Nigeria. And that's what regulation does. How do we ensure that we're protecting the financial markets from anti-money laundering, counterterrorism financing schemes? So those are the things that regulators need to think about, because whether we like it or not, where there is a will, there is a way. And that is not going to go away. When you look at investment schemes, every day I open our newspapers, Nigerians are being demystified by Ponzi schemes, right? Losing savings, losing assets. Whose fault is that? It's a two-way scheme, right? But then again, the Securities and Exchange Commission has to also protect investors and also protect asset classes and things like that. So there are many things, but one thing regulation is doing is two things. What do we need to regulate? And we have to distinguish what we need to regulate. Who do we need to regulate? And then the third thing is, how do we regulate? Do we even know enough? Do we have an evidence base around what we need to regulate, what the dangers and the risks are? Because that's what risk-based supervision is all about, right? So if we don't know enough, how do we start to learn? And this is where new regulatory instruments are being introduced into the market. You have innovation hubs. And if you look even in Nigeria, every Nigerian regulator today has an innovation office or a fintech office. In the CBN, it's called the Payment Systems Management Department. In the SEC, it's called the Financial Innovation Office. I think NCC also have a fintech office and things like that, because the bottom line is that we now need people to own and interrelate and engage with this new ecosystem actors, because the financial ecosystem is growing. Number two is regulatory sandboxes, right? And we have different types of, we have innovation sandboxes, which the CBN, again, working with NIBS and other partners, have facilitated for the exchange of APIs to ensure there's interoperability, etc. So regulatory sandboxes, how do we test and learn what's going on in the market or what the impact of this digital lending product is going to be without also, we're giving them some level of regulatory forbearance for a period of time, and then we come back and say, how do we regulate? What types of regulatory instruments do we need to ensure that we can protect consumers, protect investors? Because if I put money into a P2P lending scheme, I expect my money back. I don't expect the lend and the FSP to tell me stories after 6 months or something or the other. I expect my capital back as well with interest, right? And those are some of the dilemmas that that's going on with regulation. One of the things that we need to be mindful of is this issue of speed and agility, right? And this is where it might not be the regulation that has a problem. It might be the fact that things take too long. And so you realize that there's always that lag. How do we sort of start to future-proof our regulatory innovation ecosystem, knowing the fact that, see, today we're talking digital ledger technology, distributed ledger technologies. Tomorrow we're going to be going into new asset classes, fungible and non-fungible crypto tokens, et cetera, et cetera. What does that space look like? We don't know, but if we don't start thinking now, what is the evidence base, right? I think I read a KuCoin report the other day saying about maybe 35% of Nigerians between 18 and 60 are already trading actively in cryptocurrencies. And that's at 60% of that group are keeping their assets solely in crypto. So there already is a market. And one thing you realize about markets is, see, you can't stop the flow of water if water is leaking in this building. It will always find a crevice. So how do we ensure that that crevice doesn't lead to harm and danger? And that's what the regulations are supposed to be doing. So I'll stop there. Thank you.
Thank you. Thank you very much. I mean, you know, from everything you've said is, I think the key thing I took from it, you know, personally, is that the focus of regulators should be on educating themselves, trying to even understand what is going on and what is going to happen in, you know, the future. And sometimes instead of just coming to say, oh, we don't want this, instead of just closing it, the focus should be on even trying to understand what is going on.
I don't think it's just regulators. I think it's the entire community. Research and development is something that every organization has, right? The other day I was reading somewhere on LinkedIn, oh, Nedbank is hiring a behavioral scientist because they need to understand the behaviors of consumers, right? You know, when you're talking about social shaming, when Dio was here and he was talking about the guy that comes to sleep in front of your house, isn't that a different type of social shaming? It's just analog. So the techniques have been there. Digital is just enabling you to be able to grow it and use it on more people at the same time. So that's someone coming to camp at your house and everybody labels you, he owes money, right? It's the same thing. So what I'm trying to say is that we lack research and development in this country. We don't know, we're all winging it. We're all playing games and, you know, so when you talk about, we talked about market research in an earlier conversation. How do we provide SMEs and business owners? Because at the end of the day, Tunde's job is to manage a lending business. His job is to have institutions and an ecosystem that would provide him with evidence that he can use to grow his business. If Tunde doesn't have that evidence, he's going with his gut. He's using proxies. He's using different things. And so Tunde goes into that business and hopes for the best. How do we bring in our universities into this ecosystem? Because bottom line is that we have the institutions, right? How do we ensure that we're all part and parcel of solving the same problem? How do we ensure that we all have a collective vision of what we want Nigeria to look like and what we want fintech to do for Nigeria and Africa in general? So if we're not tied in and aligned, then guys, we're working across purposes. Because basically, Tunde is just focusing on, oh, let me survive. But there are two other credit bureaus that are registered and licensed. How do we come together and co-compete, right? When Demola was speaking this morning, he was talking about partnerships, right? Yeah. Partnership is critical. Because you're competitors, doesn't mean you can't also be collaborators. And the best example I will use is Apple and Samsung. Apple and Samsung are fierce competitors when it comes to handsets, right? Correct me if I'm wrong. But then again, who makes most of the Apple components? Samsung. So guys, let's also realize that it makes business sense to do things collaboratively, because your unit cost will drop. Your strategy is your strategy. You use the same information. It doesn't mean they're going to steal your strategy, because it was birthed in your head. You're the only one that knows the execution plan. So research and development is critical. Education is critical. We all need to go back to school to learn about these crypto assets. We all need to go back to learn about P2P lending. You know, we should stop believing they say there's money here, everybody jumps there. Do your due diligence. Exactly. Protect yourself. Thank you.
Thank you. Thank you very much. Dr. Paul, do you have a further contribution to that before I move to the next question?
Okay, so it's very interesting. And I think talking about regulations, you see that now it's a flux. You have a telco company that has a license for bank. Subsidiary of a telco company. Prof, keep on. Okay, so now, so you don't even know who is doing financial services, who is really performing financial services. And then you have regulators that are in silos. You have SEC on one hand, you have CBN on one hand, you have NICOM on one hand, you have PENCOM on one hand, and you have institutions that traverse the entire, landscape. So how do you couple all of this together? How can we, and so the partnership we're talking about is not just at the operator level, even at the regulators level, that has to happen. And that's the only way. I remember when, as credit bureaus, we were looking for means of identification on how to just crack this. And we said, okay, maybe telephone numbers can work. And then we went to the central bank. I said, where you people meet, can you help us access the NCC? And then we had a meeting. And it's like, oh no, you people go and look for how to crack that on your own. So where we are today is moved beyond everybody doing silos. That's the point I just want to add to what the prof has said. The regulators have to come together and know that financial services there's a thin line between commercial banking, investment banking, capital markets, pension, and all of that. Because consumers have products that go through all of that. And then the way you issue licenses now, like she said, is a subsidiary of, but it's owned by a telco company, and they use the data of telco to support the services that PSB is going to be rendering to the public. And so the telco resides with NCC in regulation. The PSB resides with central bank in regulation. And so that's a challenge that has to be broken.
Thank you. Thank you very much. So picking from some of the things you've said, you made mention of what you guys have done at CRC. I mean, I'm aware of the efforts, the work you've done, and how you guys have tried going to the remote areas to get people on board. And so flowing from there, I would like to ask, 2 questions, and after you, make your comments, Professor David West can also make contributions to that. The number 1 question I wanted to ask is, from your experience and from, the work you guys have done at CRC, in what other ways do you think that we in the market can optimize, the fintech and borrower experience to make sure that innovation does the job of, bringing finance closer to people? That is 1. And then 2, I mean, the work that you do is, mainly focused on, fine, it helps the, end users, the consumers, but it's mainly focused on helping financial institutions, both bank and non-bank financial institutions, make better decisions. How do you think that we can also assist borrowers to make better decisions? Because they have decisions to make as well.
All right, so thank you very much. So let me start from here. We are still low when we look at all the parameters or indices of financial penetration. We're talking about financial inclusion of almost 60%. When Dr. Shogunle presented this morning, I listened carefully to him. Access to credit for MSMEs is still less than 3%. In fact, from the data I have, and I can say with confidence that I run the largest credit bureau, there are over 41 million MSMEs in Nigeria, according to Smedan NBS. But the totality of corporates on the credit bureau by all the financial institutions in Nigeria is less than 3 million. It's less than 3 million. And those are institutions that have borrowed, that have taken loan in the last 10 years in Nigeria. So you can see that it's very low. Credit penetration when the bureau started in 2009 was just about 4%. Today, it has moved to about 14%. We are moving, yes. We are making progress, yes. But it's still a long way to go. And Dr. Shogunle mentioned also that in some jurisdictions, credit to GDP is over 100%. In some jurisdictions, credit penetration is about 80%, 90%, which means an average person, an average business have access to credit. So the same thing goes with insurance. How many of us have life insurance here? They've been talking about micro insurance, we haven't seen much. We've been talking about micro pensions, we haven't seen much. The effort, the concentration has been on salary earners and all of that. So what I'm saying is that in all of this, the fintech, the financial innovation, the services we have should help. But we are still scratching the surface. That's the first point I want to make. And therefore, there's a need for us to accelerate that growth, that expansion, so that we can have more people, more businesses enjoy financial services. I think one of the first things we need to do for consumer is this issue of unique identifier. I really don't know why we are dancing around it. I don't know why it's so difficult for us as a nation, for you and me, to have what can identify us. Because the greatest challenge for financial institutions is about trust and to avoid adverse selection. You don't want to lend to wrong people, okay? But when they don't know you, I mean, look at the example Dr. Shogunle gave in the morning about fishermen and all of that. But when they have means of identification, unique identifier, you can know who they are and know how to service them and package products around them. That's why even with all the fintechs that we have, all of them are still running around people who are salary earners. And how many of us are salary earners in the real sense of it? So we need to do more. We need to revolutionize that and make sure that we have unique identifier. That itself will help in fighting poverty because it will enhance access to credit. The second thing I want to talk about is about the credit bureau itself. The adoption there was a lot of reluctance, and I was surprised myself, being a banker myself, and I know what we went through. I supervised risk management, was in banking, and I know how we lost money. But it took, forcing banks to be submitting data. For them, who even set up my own credit bureau to submit data to it. It took government, CBN issuing circulars, compelling usage and compelling data submission. Today, fintechs practically don't use bureaus. They operate on their own world. They haven't seen the value. They see the value, they're complaining about pricing, they're complaining about speed, and all of that. But you need to get in there, first of all, and then we can then begin to address your issues. I've just given you an example of a customer that said, I want my data millisecond. And we will address it, and we have addressed it, and that's the way to go. So that is a second issue I would like to mention, that everybody, whereas there are things that government do, and part of it is to enable to have financial infrastructure that can support all that we are doing. There are financial infrastructures that can support payment system. There are those that can support lending system. Part of those that support lending system is the credit bureau system. And everywhere In the US, the UK, it has become part and parcel of their life. You can't do anything without, if you have bad credit history, you are done. And that's the direction that we are going to eventually get. So let everybody who is involved in financial services, especially in the art of lending, see that the Bureau is there to support. And so when we have those data, when those information come, and then it becomes easy to now develop products that can not just take care of those who are already in the system, but those also who are not in the system. For instance, bureaus today will just generate credit scores for those who have already taken credit. How about if you have never taken credit in your life? Now, every institution is doing it in silos. They are using various algorithms and develop algorithms to say, okay, we can look at bank statements, we can look at your SMS messages, we can look at your email, social media engagement, and all of that. But all of that also can be fused and let it come into the Bureau system. And so you have something that is national in outlook, commercially, not necessarily driven by regulation, but by necessity, because that's the only way you can have scores for everybody. And the other thing I want to talk about is operationability. You know, again, I've talked about silos. We can't be running in silos. We have to partner to make sure that this thing works. Part of it is we develop APIs. Everybody is developing API here and there. How can, and they don't talk to each other. They are just there. And that will not help us to move as fast as we should. So the point I've been making is that for fintech to move faster, we need them. There's no doubt about that. And we also need to crowd out the bad guys, you know, in the system, the Ponzi scheme operators and all of that. And we also need to do a lot around consumer protection. It's like everybody is on his own today, because even where we have consumer protection desks, they are reactionary in nature. I've not seen that proactiveness in them to bring in framework, to bring in processes that make sure that operators know that if you violate the right of consumer, there are consequences. And only few people report, as we speak today. Even to central bank, only few people report, you know, intransigence by banks. Now, NCC has their own consumer protection. Central bank has their own consumer protection. Everybody has consumer protection department. Is there a way we can put all of this together? Maybe to be led by the consumer protection at the federal level that is being headed by, I think, Irukere or somebody. Yes, Mr. Babatunde Irukere, yes. So I think that is very important. The other issue is about financial education. A lot of consumers of financial services are financially illiterate. And I think a lot has been said about that in various sessions. How can we make sure that people really understand the products? How can we make sure that people understand the process? How can we make sure that people understand the pricing? Because a lot have been, I want to probably use the word dupe because of ignorance and sharp practices, and they go away with it. Operators go away with it because there's no fallback position for protection. So those are just few things that I think I want to mention at this stage.
Thank you. Thank you very much. Thank you. Prof, I don't know if you...
Yes, I just want to disagree with Tunde a bit in the sense where, you know, you spoke about people being financially illiterate. And I disagree with you because when you look at the downfall conductor, he knows how much is due and he knows how much is to collect, etc., etc. So it might not be codified in the way that we want it codified in terms of credit and debit and ledgers and this, not, but they do know what they're doing. And I would come back and even fault the financial service providers that we know the market in Nigeria. 80% are living below the poverty line, right? I'm not going to wait for economic times to change before I'm saying I'm ready to provide financial services to everybody that has a university degree. So the onus is on me. How do I create a product or a service that meets the woman selling bolly outside on this road? Because bottom line is that she needs financial services. She's transacting every day. But yet we have not decided to go into research and development to understand, how do I serve this woman? What are her needs? What are her problems? We sit in our offices and we build products and services for people who look like us. Then we want to superimpose them on this woman selling boli. And you find out that she rejects the product. Why? So I think that, again, we also need to invest more in our own abilities to reach the Nigerians as they are today, not the Nigerians we want to see tomorrow. Because we cannot create that economic tide and change if we don't start now. And that's where we're having the problems, because nobody wants to go down market. Nobody wants to go to mile 12. We all want to go to ShopRite. That's the honest truth. So how do we take off our nice suits and jackets and wear jeans, Wellington boots, and go down market into the heart of where this trade and commerce is going on? Go to mile 12. The amount of cash they're transacting every day. And that is just one use case, one segment, right? Danfo driver, another segment. Keke Napep, and there are many of those use cases. So if we are also not going to chase those use cases, then we're also failing the Nigerians. There's something called a duty of care that financial institutions also need to have. You don't need a regulator to tell you to do things properly. Why should I, after a card dispense or whatever, have to chase my bank for 6 months? And then they don't answer me. But because I work in this space, I want to see what it is like, even for me. Then I now go and think, what is it like for my Boli woman who cannot, for example, leave her store? Because if she leaves her store, that is also reducing her economic opportunities for that day to chase a bank for money she deposited, her hard-earned money. Right? And then until I write to CBN, within 24 hours, the same money that the bank said there was no problem was refunded. Where is the equity and justice and fairness in that? And you find out that there is more of that going on. And until we talk to ourselves and address this thing, must a consumer go and report to headmistress before I do better? Because the bottom line is that even if, and this is where, again, maybe we don't have the right structures, because if you can make 80% of your income from 20% of your customers, then you ask yourself, is there really a point in doing this business? I have no problem with that, but to thine own self, be true. But if you say you're serving somebody and that service fails, then please be responsible enough to do what needs to be done. Because you see, you and me, Tunde, we have multiples of 5,000 naira. We can go back to another ATM and withdraw another 5,000 naira. What if this woman has an emergency? Her child needs to go to the hospital, right? Her child, she can't get the medicine that she needs for her child. Her child dies. Who bears that liability? So you see, it's not just, we have to really think globally about the implications of failures and our duty of care. Because there is a secondary liability in that kind of situation. But then again, there's no recourse. So she just goes about crying, if she can find somebody to give her the money, etc. So, ladies and gentlemen, I think that before we go to the regulator is the oversight body. How do we self-regulate? People like Axion, the World Bank, they have principles around consumer protection. The first principle on digital lending, appropriate products. Are we designing the right products? Because are you forcing people into overlending? Right? Because when you're giving somebody a loan and giving somebody and giving somebody, you're forcing the person beyond his means. All right? All because, a loan officer says, I need to book loan. So again, we need to align our forces and realize that it's a system and it's an ecosystem, and we are all related and connected. The regulator gets a lot of the brunt, but a lot of the time, the operators are the ones that are creating the havoc in the market, and then they want to dump it on the regulator. Unfortunately, we run in a society where there's a big power distance. So my woman selling Bolly does not have a voice, because she walks in her wrapper and everything, and everybody just looks down on her, rather than, oh, this is the person that is paying my salary. Without this woman and 10 million others like her, I will not be in this business or in this institution. So I think it's the thinking. Our mindset needs to change around how we see our consumers. Our consumers are 80% below the poverty line. But if you look at countries like Bangladesh, India, China, they have the same demographic. But yet they are willing to honor and respect those people and bring them into the fold, and also treat them with the dignity and respect that they deserve. So we need to change our mindset, please. I'm going to appeal to all financial service operators. Let's not look down on these people. You see, go into your bank today without your suit. Go in a pair of jeans and slippers and see how they treat you. And nobody shouldn't be that way. And those are the little things. And this is where, again, we need to understand what are the behaviors of Nigerians. We can't bring systems and practices from US and America because their own behaviors are different. How do we backfill, or as we said, backward integrate into understanding? And then when we understand, we know how we can address them. So I think for me, there's more work on the provider side without thinking that it's a slam dunk, right? 2009, mobile money licenses came out. Everybody thought it was a slam dunk, right? We had 19 licenses in that year. Where are we today? We're still singing the same financial inclusion story. It's not a slam dunk because the Nigerian consumer is unique. It's not the Kenya consumer that has M-Pesa and adopted M-Pesa, but who is the Nigerian consumer? Thank you.
Thank you.
I want to add to what the Prof has said. And, you know, when we look at, and I'll just give example from lending perspective to say that a typical Nigerian borrows, but because he doesn't borrow from the formal financial system, is not recognized, is counted out of the data that we use. And I think that's the first major thing that we see. So a lot of people have cooperatives, they do in organizations, there's a way they help themselves. In companies, there's a way they help themselves by coming together and rotate. There is a way, if I need money, I know how to get all of that. So all of those happen. And why is it like that? And that comes to backing you up on that downfall person that, yes, he may not be banking, but he's intelligent, he's financially literate, he knows what he's doing, and he knows what to do. But what brings about that, from my understanding, from my experience, is also the trust deficit. And it's a game because of the perception that has been created, just the way you have painted it. They won't listen to me. They will not allow me to enter the bank. They will cheat me. That's the mentality. And so we need to find a way to build models that can then address all of that, that can make, it's like you having a child is coming and you fry your face, he runs away. But when you smile, then it's easy for you to entice him to come to you, right? So it's that same way that, And Prof, a lot of us, even elites, still suffer the same thing that you're talking about. And I just give you a simple example of what happened to my wife just 2 weeks ago from her bank. I won't mention the bank. She wanted to travel. She got the PTA. She wanted to collect it. And they told her the only money they have is 20 Naira notes. I mean, $20. note for her to collect $4,000. That's a typical, I don't know anybody here, so I can be treated, you can be treated anyhow. How will anybody tell you that you want to collect $4,000 and the only denomination that's available is $20? So it happens to us as well, but it's much more fundamental, much more deep at that level, and that's why they just run away from this. Let me also say for even the microfinance bank that I run, because I have one in my village that I supported, and I know this, a lot of them still behave the same way, like the typical bank will behave. So you have a situation, I don't want to come, just take my money and go and deposit it like that. And in the process, frauds, you know, money stolen and all of that happens. So I think the way it is that some people think out of the box, they bring solution, and then everybody rush to it. You recall now, Prof, that 10, 15 years ago, nobody is will be talking about consumer loan in Nigeria. We're all talking about the big bag, the big. In fact, when you take 100 customers, borrowers in a bank, and you look at the value of their loans, it's more than 90%, even though there may be 2,000 borrowers. And when you have 2,000 borrowers, you can be sure that the depositors may be 2 million depositors. But out of the 2,000 of the 2 million, it's only 50 of 60 that constitutes the largest chunk of it. Why do we have all of that? Until these fintech people started coming. I remember the bank I worked for, we did a retreat. We brought in KPMG, and we said, come and tell us about the ICICI model in India. We wanted to go, and then everybody started saying, no, the cost of servicing these people is very expensive. You don't have the cost. You'll be treating at a loss. Let me give you another example. So I can go on and on. You said we're here too fast. About, I think, second or third year when we started credit bureau infrastructure, 3 of us, MDs, met MD of a bank on how we can make this thing work. And he told us point blank that his bank will not use the system. That our infrastructure is meant for consumer loans, it's meant for small loans, that less than 3% of the book, the value of the loan in his loan book. So he can afford to close his eyes and lose that one. That the one he cannot afford to lose is the big ones. And he doesn't need a credit bureau to do that. In fact, when we went to one of the smallest banks, they told us that we know our customers up to their bedroom. Do you understand? But now, flip it 2 years later, 2 years ago, 3 years ago, all of them are crowded into retail lending. Most of them have MSME desk. A lot of them are either doing consumer loan by themselves, or they are trying to look for application, or they are trying to look for partners now, because somebody has done the work. So that's what we like doing in Nigeria. We don't like doing research. We want somebody to go and do the dirty work. But I agree with you. We all have to, because business is about closing the gap. It's about meeting the needs. We all know what the needs are. Every Nigerian must have access to financial services. And even with the plethora of fintechs that we have, there's still a lot of people who still don't have that access. So that is it for us to look at what model, what can we bring up to address that? How can we get them out? How can we build that trust for them to trust us to say that even with my wrapper around me, I will be attended to with dignity and not the other way around.
Thank you, Dr. Bowola. Very interesting points you two have made. Even the 10, 15 years we were talking about, when commercial banks, when they were talking about financial inclusion, their own understanding or their focus was, bring deposit. And then when it's time to lend, they focus on the large corporates. But when the non-bank FIs started making money and started growing,
there are some branches of some banks that don't have one single borrower in the books. There are branches that are dedicated only for deposits. Only few are dedicated for lending. If you want to borrow, then just 5 out of these 50. That's the way it is for a lot of the banks.
Thank you, thank you. I mean, my last question, I think the last question has been answered. Yeah, the last question is just me wanting to know, in way of summarization, what are the pointers that players can use to bring consumer protection to the fore of financial innovation, and I'm sure we've touched that as well. So maybe no need to ask that. I don't know if we have any question from anyone before we wrap up. Okay.
Okay, thank you very much, Professor David West and Dr. Tunde. So we're talking about financial inclusion, and basically, like you've said, we have many fintechs currently, but we can see boldly that many of them are really imparting the MSMEs or the SMEs. And I think also as a player as one of the operators as well. And I think the major challenge is the perspective of consumers towards fintech products. An average Nigerian feels that a fintech loan is a grant. The money that they hold my forefathers is an avenue for me to collect and move. You understand? And that's why you see most of the fintechs based on their product is channeled towards consumer related. But the major players, the MSMEs and the guys that we impart, that we have what we want to evaluate social impact, we are not getting facilities. Why? Because number one, there's not enough data. How many people can access LPO facility, purely fintech, without someone interacting with you? But we've just realized that as players, that an average Nigerians, if you don't see someone come to your office to interact with you, you don't believe you've collected a proper loan. You feel that is a grant, and I can move on with it. So what do you think? How can you advise the operators and also the consumers as well about their understanding of financial fintech products generally?
Can I give that a stab? And I think that this is where, you're not the only one facing this challenge, right? And there's this issue around, I'll go back to what Tunde said, financial education and consumer behavior. So until we understand why they feel this is dash, right? Or this is their share of the national cake, for example, then we can't crack it. Because you see, one of the things that we are learning a lot of, especially as we go globally in looking at financial services in the consumer space, it's all about behaviors and patterns. And this is where we have behavioral economics, right? How do we nudge people one step at a time to the behaviors that we want to see them occur? There's practices around this. Within the NESG, there's a Policy Innovation Center that looks at a lot of these issues around behaviors. And the behavior, so I'll give you a good example. The Lekki Toll Plaza has been there for more than 10 years. The mindset and expectation was that anybody, and the design was that anybody who lives on that axis will get a toll card. And that toll card is a prepaid card that also gives him a discount as he passes through the plaza. A lot of people who live on that axis did not. They chose to queue for longer and pay cash on a daily basis. That is not normal, right? So how do we understand what is driving them, and how do we get them to change from point A to point B? And it takes a while, and it takes research. Because we can't, you see, nobody is going to overnight wake up and smell the roses and they're behaving in the way we want them to behave. So we need to understand that consumer behaviors are integral into any financial service P2B or individual financial service that we need to provide. And we need to start learning and understanding. Because when you don't know, you're going to go into that line of business and you're going to get hurt. Because basically, you'll be giving out monies and you cannot collect. And this is where collective intelligence, how do we, again, advocate with CBN? You know, why doesn't Tunde give you, for example, 50 searches for free? And then after that, and then after that, you start paying subsequently and things like that. But I think it's also opening our minds to the complete value chain of the industry you're working in. A lot of us as fintechs and tech people, we focus only on the tech. And we're so excited about the tech, we forget that, guys, there's people that have been doing this business for longer. And whether your channel of delivery is digital or not, the process is still the same. And so we need to also come and learn. Not that, oh, I have an app. You can learn from my app. Guys, it's not the app that sells and brings money. It's the whole practice end to end. So you need to understand all those things and come together as a group and put these structures in place and say, oh, how do we address, go to the NESG. We need access to the Policy Innovation Center. What does it entail? Otherwise, we're just going to continue coming to events and we'll talk and we'll go back and continue moaning, and then in another 2 years, we ask you, oh, where are you now? Oh, I've pivoted to doing something else. In short, thank you.
Thank you. Thank you, Prof. Dr. Tunde, I have one question for you. I think it's someone seeking clarification. I think it's to your point when you're talking about identity verification and why and how we can't really identify some people. So the person says unique identifier. Why can't NIN and BVN fit into this?
Yeah, so that's the point I'm making now. So we have plethora of means of identification. You have BVN, you have NIN, right? You have driver's license, you have pension number, you have passport, international passports, and all of that. A lot of people have only one, maximum maybe some have two. The question is, why can't we have one? So the work we are doing is too slow, Prof. It's too slow. I mean, look at India has 1.2 billion people, and they've been able to successfully do that. In South Africa, immediately you are born, you have a number. That number is rested when they put you in your grave. But it's the only number you need for all transactions in the country. So what's the big deal in registering 200 million people? Even the process of NIMSI is clumsy, is discouraging, is stressful. Why should we go through that? Why should people be struggling to get themselves the unique identifier? Why must the passport number be different from my NIN? These are the issues. We need only one number. Prof, you want to?
I want to add. Okay. You see, you're right, Tunde, but you see, again, if you go back to these things, there are also legal frameworks around each and every one of these things. And when you look at, for example, the passport is an immigration framework, the NIN is an identity framework, the voter's card is the voter, and these are all enacted in law. And so, again, it's also about how do we begin to harmonize our legislation. Because don't forget that in each of these legislations is the enactment as well as the scope in terms of reference for each of these agencies to be able to do. So that's really, and this is where the NIN is now actually our tool and our central identifier, unique identifier for each Nigerian person. But unfortunately, this is also about government digitization. Because when you talk about, when you're born, this is done at the local government level. right? I saw something on one of these memes on Twitter or so the other day that, oh, have you ever seen a police station with a computer, a working computer? So if the local government cannot automatically capture, or they're capturing on paper, that means we now still have to transmit somewhere for digitization before it becomes useful record, etc., etc. And this is also part of the challenge with not modernizing our systems fast enough. Because now we're in this lacuna where we have so many gaps. You don't even know, look at what, even recently, I think a couple of years ago, the president nominated some people to office and it was found out that some of those people had died. You know, and these are all the information asymmetries that we have in the ecosystem. But you see, this is beyond financial services. Financial services sits as one of the functions that uses foundational identity. And so when you go back to one of the things the government is trying to fix is through the World Bank grant, is actually what they call ID4D, ID for development. And one of the areas of that is that they have to now enact data protection bill. We don't have a data protection bill. The NDPR is a stopgap. And what the World Bank is saying is that we will not give you that money until you have proper legislation around it, because the legal framework must be there. If somebody sells your identity or steals your identity, what protection do you have? It's your constitutional right. So it's about how do we enforce these protections and do them in a manner that works. Yes, it's not fast enough, but there are many, many different institutional voids that we need to address. There are many bureaucracies that we need to address. When voters registry started, my challenge was that, guys, if you look at how a government worker uses a computer, it's almost, you go to the airport, doom, doom, doom. It's slow. How do we educate and give them the proper digital tools to be able to ensure that they're effective in this thing? Because when you look at the airport sometimes, a plane of 400 arrives, it can take 3 hours to process them. And this is all about what? Response time, operations management. You know, so if we're not building all these things in and understanding the science of it, we will not get far. But I think it's not impossible if we all collectively sit down and work through the systems. Our local government offices, they're not even in a conducive enough environment to house a computer, right? You go, even when you want to come into the country and you do the NDPR, a lot of these officials are using their personal devices. Yeah. When we went to get COVID vaccination, right? What did you experience? And these are the types of things we should be asking and asking ourselves. What is the responsibility of government? And that's why your voter's card is a critical tool. Because if you go into an office and you don't give your workers the tools they need to do the work, what are they going to do? They will find their own business to do. So I think that it's a lot of work. There's different layers that we need to address. There's the legal layer, there's the political layer, except the wherewithal layer as well. But then it's deeper than we think in the real sense of it. So let's be patient and hope that we will soon get to the end of the line with what the World Bank is proposing, because what the World Bank is proposing is harmonizing that we have a foundational ID. That foundational ID is your name, your biometric, etc. And then for each function that you want access to, financial services, driver's license, passport, they collect the extra on top that they require, but everything is still linked. However, caveat, NIMSI server broke down the other day, right? And if you read today's newspaper, Passport Office will tell you that, oh, that's why they couldn't issue passports, because NIMSI server they have to validate, and they can't validate. So reliability of these government systems is also critical and important. Okay, so there's a lot of work to be done. Thank you. I'll stop there.
Thank you very much. Thank you. I mean, these discussions are discussions that can go on and on for 6 months if there are no time limits. So much to listen to and so much to learn. Thank you, everybody, for listening, and thank you, Dr. Popola and Professor David West, for allowing us a peek into your wealth of experience and knowledge. Thank you very much. And, that rounds it up for this panel. Thank you. Thank you.
To give us our closing remarks, we would like Mr. Niyi Ajao, founder of and CEO, Digital Finance Solutions Limited, and thematic lead, Financial Inclusion Thematic Group, to come and give us our closing remarks.
Good afternoon, everyone. I want to thank every one of us for our patience. It's been some hours. I think the program started at about 9:30, and I've been on it myself. I started watching virtual before I came to join physically, and you agree with me that the time spent is really worthwhile. A lot has been said. A lot has been shared, statistics, experiences, worries, concerns, and a lot has been said about the things we need to do to really increase what we call inclusion, financial inclusion, prosperity inclusion. I like that word, prosperity inclusion, in our nation. The program started with the keynote address by Dr. Demola Shogunle, that's the CEO of Stanbic IBTC, and I was asking one of the organizers that I hope we'll all have a copy, every person should have a copy of that presentation, because it really came very clear on statistics, what is going on, what are the challenges. And after he finished, we had our first session, plenary session, on mobilizing domestic resources for inclusive prosperity. And I want to believe we all recall all the conversations there. I took a lot of notes, which I think the rest of us will have taken. And then we had the second plenary session on attracting foreign capital to Nigeria post-pandemic. Again, the panelists told us a whole lot, very interesting and very enriching conversations there. And this last one we just finished with, the third plenary session by Dr. Pupola and Professor David West, on striking the balance between innovation, regulation, and consumer protection in the financial sector. Now, I recall in one of these programs, I think in the early part of the day, somebody threw a challenge to the organizers that we should have a communique. Because a lot has been shared here. A lot of, apart from sharing particular experiences, there have been so many prescriptions, how we should surmount some of the problems that we itemize. A lot of ideas have come up that we need to really, articulate. For me, I think in all the conversation, one area I find very interesting is the fact that the opportunity is still there. There was this story, I don't know if you've heard it before, there was a story of these 8 hunters who were going to a forest to go and hunt. And before they entered the forest, they began to ask themselves, okay, if you kill an antelope, who will take the leg? Who will take the head and all that? And they began to quarrel among them. Even before they entered the forest, they began to quarrel. And this argument turned into fights. Blood was coming out. And then one elderly man was passing. They said, come, why are you guys fighting? What's the problem? And they then began to explain that, okay, we're going to the forest. In fact, we're just arguing about how to share antelope. The old man said, okay, bring the antelope. Let me cut it. Let me share it for you with my wisdom. And they began to look at each other. They've not killed, the antelope itself does not exist. And they're already fighting. For me, the wisdom in this story is the fact that in all we have been talking about today, the elephant in the room is financial inclusion and the opportunities around it. So for me, my comfort in all of this, my joy is the fact that the business exists. In what I do currently after my time with NIBS, I've had to interact so often, and I'm interacting a lot in my consulting work now with fintech guys, foreign investors who are looking at this country. And to amaze that when we talk to these people, They park aside your security, all these things will come. They park them aside. Their focus is on the opportunity. They are looking at 200 million population. They're looking at what can be delivered. They're looking at what can be done. That's what they're focusing on. So for me, my joy in all of what we've been talking about since morning is the fact that that opportunity is there. The opportunity to do business is there for everybody within this space. For all of us as professionals, there's that huge opportunity. That's one. Two, call it social enterprise. Through that same opportunity, as we strive to drive that opportunity, tap into it, and run our businesses and make money, there are ways we are doing it to benefit society. Thirdly, my third joy is the fact that the tools we need to tap into those opportunities, they are all with us. Call it fourth industrial revolution. We've been talking about fintech. They've been talking about big data, AI. We have so many tools in our hands, much more than we've ever had in history. So I don't know your perception about all the conversations. So I'm saying we don't need to live here with any sense of gloom. For practitioners in this space, every problem that's been identified, if you ask me, is an opportunity. So the opportunity is there. We have the tools. And I would say we have the people. We have the human resources. We have the people that will fix these problems. We have the fintech. We have the experienced people. We have the fintech who are just coming. We have those who have been in the finance services industry for so many years. So collaborating among ourselves, working with the regulator, I think the future is very bright. We can still do, there's a lot we can do to improve on the system to get Nigeria to where we want it to get to. I think Dr. Obuola made a comment to the fact that if you look at where we're coming from, I think we should begin to appreciate ourselves. Yes, a lot still needs to be done. There's a lot of work we need to do. But I think with the way things are going, given that the opportunity is there, we should be able to get there. Now, to wrap it up, I think the next phase of this conversation, of this engagement, is action. When the communique comes out, how do we go all out so that when we gather together, maybe in a year's time, we should be talking of specific achievements. When NESG and ZCrest or any of the other partners call us together again, we need to begin to look at what should we do, what action should we take. And I tell you, one way to do that is to collaborate with NESG, who is in the forefront of driving this agenda. The NESG has too many policy commissions. They have thematic groups. And there's a particular one that I lead whose topic is very relevant to the conversation we've been having this morning. And that's the Financial Inclusion Thematic Group. It's one of the thematic groups of NESG. There are about 20 of us there. And if you look at the membership cut across the different value chain when it comes to financial inclusion and finance services. We have regulators. We have the Professor David West is a member of the team. We have people from EFINA. We have bankers. We have people from super agents, all across. We sit down together quarterly to look at this landscape and to have the same conversation, to look at what is going on in the space, what are the challenges, how do we fix them, what are ideas about to fix them. And you know what excites me most about our conversation is the fact that as we're looking at solutions, almost all the time, those that will provide the solutions are in the room. Because we have everybody, banks, regulators, we have research people, we have the academia, we have super agent, like I said. So what we do there, you know, it's so easy to just talk, to analyze these things and begin to pass the whole thing to government and then we'll go home. But when we meet in the thematic group, we assign responsibilities. Oh, okay, there's a problem about customer service. Everybody's complaining. Okay, whose job is it? Okay, CBN has to do it. Who need to package the proposal to CBN? Whether it's EFINA or the banks, we have a subgroup. We put something together and we pass it to CBN. And that is helping a lot. So I'm closing by challenging every one of us to come and join us so that the conversation will not just stop here, so that we'll continue to discuss. The membership is open to every individual who has interest in this space. Every individual who is interested in finding solutions to all the problems we complain about, because there is a solution to each of the problems we've talked about. To get to the thematic group, I'm sure you have the contact of the NESG. So if you just send a message that you want to be a member, they will let us know, and then we'll begin to give you invitation to our meetings. So with that, I want to once again appreciate the NASG and ZCREST for coming us together. Since morning, there have been refreshments. I think we're having a good time together. And it's been another opportunity to see one another, to connect. Same for those who are online and those of us who are here physically. So I want to thank every one of us for spending the time to be here. Let's continue to carry the battle forward. We'll continue the conversation, and as we come across each of these problems, please, let's continue to focus our mind on finding solutions and getting to those who will provide the solutions. I've always said the easiest way to run away from a problem is to just talk about it and pass the blame of fixing to somebody else. And then you just leave it there. We must look for who is responsible, push them to do the job, we'll follow them up and make sure that things get done. And then gradually, we're making progress. Thank you very much. And the organizers, I want to especially thank you. And for the guys who have been providing the streaming service online, I enjoyed it before I came in here. I want to especially thank everyone. The streaming has been very, very good, very, very perfect. Thank you so much. And I pray that the Lord will lead every one of us home safely as we leave here to our offices. Thank you.